suggests something different, something potentially more dangerous than the recent theory with the magma rising up. They argue that the main driver of this unrest is not the magma heating everything up, but pressurized geothermal water and vapor trapped beneath the surface. So what is this? They describe a pressure cooker system, a reservoir of fluids sealed in by a cap rock. It's called cap rock, a kind of geological lid that actually heals itself through the formation of mineral fibers. And over time, this cap rock becomes so strong and so tight that pressure could build without escape until it explodes. So wow, guys, before we were so worried about the cap rock layer weakening. So are they saying that this thing is getting stronger and that this is even more dangerous than the cap rock layer weakening and letting the magma through? Campi Flegrei is a supervolcano, a volcano so vast and powerful that its last major eruption has changed the climate of the entire Mediterranean. And now imagine that this volcano is showing signs of pressure, extreme pressure buildup, as we've just seen with the last massive earthquake swarm that was happening May 12th, 13th, and 15th, and then the big one in March. So Italy's gigantic supervolcano has probably entered one of its most dangerous phases. And that's not fear-mongering. This is science. The newest study that has been published about this is shaking up everything that we thought we knew. One thing is for sure, whatever it is, Campi Flegrei is creeping towards something. Best case scenario, phreatic eruption, but worst case scenario, magmatic eruption as well. And I have made a video about this. My last video, it's the officials that are saying this, the civil defense, the president of the INGV. But I want to quote one of my viewers that has commented underneath this last video. So quote, "I'm not a volcanologist, but I am a geologist, and whilst volcano eruptions are in my bag, I know that seeing increased gas emissions, temperature, and earthquakes are a very worrying sign, especially when it's coming from a supervolcano that could cause mayhem around the world. Seeing how close the magma is to the surface also shocked me. I sincerely hope it does not let go because it will devastate large parts of Southern Europe. I'm very worried about that volcano and for the people." I think you can't sum it up better, so thank you for that comment. And Campi Flegrei isn't your typical volcano. It's a massive caldera complex that spans over 100 kilometers. And it's an underground cauldron of fractured rock, boiling fluids, rising heat, a shallow magma chamber or multiple shallow magma chambers that are fed by a deeper lying magma chamber that lies at around 8 kilometers. Over the past decade, residents of Pozzuoli have felt the tremors, the earthquakes. They have seen the ground rise as much that their port is running dry because the land was rising so much that it was pushing the water out. And of course, the residents heard the scientists debate one burning question: is magma on the move upwards again? And you should check the last studies that have come out about that, how close it really is. But now, this team of scientists, they say there is something potentially even more dangerous than the magma creeping through. And the last study is dangerous because they found an Achilles heel where the rocks are so brittle in one spot where magma could find a way to the surface. And now we have something that is even worse, the pressure cooking thing that I just mentioned earlier. The fluids sealed in by a cap rock that can, of course, build up massive pressure. And they call it a silent killer because it doesn't give you a warning. So here's how that works. You have to imagine, put a pot with water on your stove, heat from below, magma, turns the water into steam, but the pressure can't escape until a valve opens. So now imagine the valve is faulty and it's clogged up. The pressure builds up silently. You see no smoke, you see no magma. But one day, boom, that's what happens. Happened to me in the kitchen. I have to admit this because I'm always busy with other things. And I'm sure to many of you it probably happened as well. But this is exactly the concern now. All
right, we got it. Hey, everybody. Pete the Greek, you were right about trying to buy some a little bit lower. Let me see where Railtown is trading. Got hot coffee here. Let me just pour some, get it out of my way before I. All right, get that out of here. There, I have room to move. All right, let's see if I can. Let's just get the quote on Railtown. Pete the Greek, sorry, I don't know why I said that a second time. Pete the Greek was right. He bought, I remember, if I have the wrong guy, I'm sorry, but I think he bought 10, and still is trying to buy 10. And, now it's 37 cents instead of 38 cents. So that's pretty good. Pretty good. I still think playing around for a penny or two is likely at some point. I thought, I really thought that, and I do think that it could be any time. The MOU was announced February 11th, and we're now June 12th. So, I would have expected something June 1. So every day it feels like to me we're on borrowed time if we're not planning on that deal getting announced as completed, and then that's good news. I would take it as extremely good news because it would allow people, some people on the sideline who haven't been able to buy to start buying, and I think you'll see some buying pressure come in. Others might have to wait for the shareholders' approval, I guess. Wow, that's hot. That's a good cup of coffee. All right. There is a lot of sad news in the world, and so maybe we can start by just saying a prayer for all the people killed in India. Very tough. It looks like the best guess of what happened with this amazing Boeing aircraft, a great track record of safety, it might have had a power outage. And it's pretty frightening. So one man survived. One man got up and walked out. He was in seat 11A, right at the exit. Anyway, it's a tragedy. I hope it wasn't somebody testing out something, because imagine a world where we can't trust flying. That would be a little bit frightening. South Korea has, I mean, it's brilliant. I'm glad scientists are doing this. I mean, it just makes me feel so much safer. But a lab in South Korea has created a bird flu that's 100% lethal in mammals. Why are we doing this? Why are we doing this? They're going to move, I think it was 20 billion of AI creation. I forget right now which company was going to do it into Pennsylvania. Remember, that's where the Marcellus and the Utica, well, yeah, it's the Marcellus and the Utica are there. I'm wondering if I'm leaving out another zone. Micron is coming into the United States with 200 billion for chips. All right. Now, I wanted to tell you guys about a research report that's 1 year old. It's 1 year old, so it's not new. It's not new, but it is pretty darn relevant to what we're doing. Of course, I got to find where I put it. All right, so I just type in books, I guess. B-O-O. There's books. Should be there. Yeah. No, it's not in books. So maybe it's in files. Downloads. Type in today. I don't know. See, I'm pretty non-tech savvy, but I downloaded it today. So let's see if today does it. Today. That doesn't do it. All right, let me go. All right. I used to have a friend that would say that. All right. Let's go do it this way. Always more than one way to. Okay, so there's, and I think I can show it to you. Unless I've screwed that up too. Let's see what this says. That's not it. Okay, so here's the first page of a research piece from Research Capital. You can see up in the corner that it's dated July 2nd, 2024. So it's basically a year old. This is Railtown Technologies, RLAIF. And it's initiating coverage. They initiate it with a speculative buy, price target of $2. Price target of $2. And I would just point out to you as we read this that everything is on pace except they ran into AI Partners Network, AI Partners Corporation, the network of 163 companies, that they decided to buy it purchase it. So that's added 5 months to the timeline. But if you read this and recognize that this research report is just about Railtown AI technologies, it's not about AI partners networks at all. The target of $2 is built in from a year ago on what this analyst, Venkala Velagapundi, projected from Research Capital a year ago, and they're on track. They're on track with all that. It's just they've had to take a little bit of a detour to buy a whale. All right, Railtown AI is pioneering a powerful tool to transform and enhance software development efficiency and quality. We believe the company's first mover advantage and the founders, that's plural, history of success position it to capture a meaningful share of the market over the long term. We initiate coverage with a speculative buy rating and a target price of US dollars $2 per share and Canadian $2.70 per share. Railtown AI is poised for growth in expanding software developer market. Railtown AI is developing a robust tool to revolutionize software development by boosting productivity, improving quality, and saving time and money. Acting as an intelligent assistant, it learns client software to automate repetitive tasks, to monitor performance, and to serve as a built-in quality checker. The platform currently functions as a root cause analyzer, conductor, velocity dashboard, and release notes automator. Those are essentially their products, with further enhancements including automatic ticket generation and no-code virtual software development. Railtown's addressable market, this was written a year ago, Railtown's addressable market is projected to exceed $3 billion by full year 2024. That's the end of last year. Driven by the expanding global population of software developers. The company's sales strategy targets small and medium businesses and enterprises through direct sales and partnerships with Microsoft partners like Quisitive. These collaborations leverage established networks to accelerate user adoption and scale the platform efficiently. Scale's not really meant to be used that way, but everybody does it. Valuation and recommendation. We estimate a TP, not to be confused with TP, but rather target price, of US dollar, $2 per share for Railtown technology using an enterprise value to revenue multiple of 12 times on full year 27, so that's 2 years, estimate revenue. So that's not that you have to wait for that, but that's the full year 27 estimate revenue and accounting for a 20% dilution factor for potential equity financings. Given Railtown's first mover advantage and the founder's proven track record, we expect significant market share capture over the next 3 years. And my belief here is that you're not going to have to wait to the end of the 3 years. In fact, you're not going to be able to wait very long at all before that 3-year experience gets priced into the stock, presently, in the proper use of that word. We project higher adoption rates in the United States attributable to a higher return on invested capital, ROIC, and launch timing, using a market penetration rate of 3% in the United States of America and 0.5% elsewhere. That's useful. I like those two numbers, 3% and 0.5%. Altucher and PricewaterhouseCoopers are projecting 15.7 trillion. Be interesting if they just get 0.5% of that or 3% of that over the next years. Based on these assumptions and the current pricing structure, we estimate a TP equivalent to Canadian dollar 270. We initiate coverage with a speculative buy rating. All right, let me see if I can. Even though I try to keep it all in order, I'm going to delete that one. They come. All right, so the next one would look like maybe this one. Yeah, okay. We initiate coverage with a speculative buy rating, acknowledging the risks of investing in a company yet to generate significant revenue. Pay attention to that, because as you get into this piece, he does a year ago, or she, could be a she, projects revenue coming in this year, 26. Actually, we'll find out. I'm trying to remember if it was 26 or 24 or 25. Anyway, we'll find out as we read it. We'll pay attention. Catalyst. Key catalysts for Railtown AI at this early stage mainly involve improving market visibility and rapid revenue growth through strong market validation. Potential positive news flow from rapid scaling, user acquisition, and engagement metrics indicates robust market validation and substantial market share potential. Strategic partnerships with industry leaders will enhance user growth and credibility. While the company has a clear revenue model, emerging new revenue streams attributable to technological advances as the product evolves may also improve visibility over revenue growth. Let's delete that one. So I'm not. All right, this is the report we're going to go over. This is the Railtown report. It's in the technology sector. We've already, I think, gone over the investment thesis. We'll go over the company overview. And at the end, we'll get to a valuation target and recommendation. But we'll go through each of these right now. Let me delete that. If I delete it as I go, I won't be double showing it to you. All right, so I think that is that's not, yeah, maybe that's it. No, that's not it. Well, I'll try it. Oh, it is. Investment thesis. So here's the investment thesis of Railtown from Research Capital. And you can see I kind of highlighted the first 3 points here. Railtown AI, the future of efficient and effective software development. Railtown AI is developing a powerful tool to enhance software development by boosting productivity, improving quality, and saving time and money. Acting as a helpful assistant, it learns clients, that would probably need to be pluralized, but that's all right, software to automate repetitive tasks, allowing developers to focus on more critical work. The platform monitors performance, fixes problems before they occur, and serves, you need one of those when you're married, and serves as a built-in quality checker. Railtown AI deeply understands client software, automates mundane tasks continuously. Oh, see, I can't read that comma. Okay, it automates mundane tasks, and then move on, continuously learns and improves, and provides clear performance reports. It unifies all software data for easy use and customization to fit specific needs. By analyzing data in real time to quickly and more let me read from my phone because I'm having a hard time. It's so small. Railtown AI deeply understands clients' needs. How does it make you feel? Railtown AI, I don't know where I am. Railtown AI deeply understands client software, automates mundane tasks, continuously learns and improves, and provides clear performance reports. It unifies all software data for easy use and customization to fit specific needs. By analyzing data in real time to quickly and more that shouldn't be a new sentence, should it? To fit specific needs by analyzing data in real time to quickly identify and fix issues and automate tasks like bug report generation. Railtown AI developers build better software faster and more cost effectively. I'm sorry I screwed all that up. My eyesight, my glasses, I apologize. Currently, the platform improves developer efficiency by functioning as a root cause analyzer, conductor, velocity dashboard, and release notes automator. In the next stage, Railtown plans to add automatic ticket generation, and future stages will include no-code virtual software development, significantly expanding the addressable market and marking a pivotal milestone for the company. The company currently holds 2 patents and plans to file a 3rd. All right, the next point. Glad to get out of that morass. Growing population of software developers. The global population of software developers is expanding and is projected to reach 29 million by the end of 2024. With Railtown's current pricing structure of $108 per year as the basis for its average revenue user, the addressable market is estimated to exceed $3 billion. This market has the potential to grow even further as Railtown enhances its platform with new features, which could allow for higher pricing. The current pricing model charges per user, per product, meaning a single user working on multiple projects pays multiple times, leading to a higher average revenue per user. Additionally, Railtown's target market could expand beyond beyond software developers, with the potential launch of its API. Hello, API. This is Margaret. With the potential launch of its API for no-code virtual software development. While it is challenging to precisely quantify the future size of this addressable market, the indicators clearly show substantial growth potential. All right, and then the next one is strategic alliances, Microsoft partners. The business strategy, Railtown's AI sales strategy is multifaceted, targeting both SMBs and enterprise organizations through direct sales, reseller partnerships, collaboration with Microsoft partners. By leveraging reseller relationships, Railtown extends its reach under white label services, allowing resellers to manage user acquisition and branding, whilst Railtown focuses on technology development. The collaboration with Microsoft partners is particularly significant as it enables Railtown to tap into established networks and customer bases, accelerating user adoption and scaling the platforms. In this case, this example, Quisitive's ability to onboard clients independently and provide ongoing support enhances the customer experience and increases platform stickiness. This strategic approach not only broadens Railtown's market penetration, but also recurring revenue streams, underpinning the business model's sustainability and growth potential. By aligning with industry leaders and leveraging their market presence, Railtown AI can efficiently scale its operation and capabilities on new market opportunities. All right, let's take that one down. I need a bigger screen, better eyes. Let's see what the next thing looks like. It should be blue. Is that it? Yeah, that's it. Okay, so that's actually not it. That's not it. I think this is it. That's not it. There it is. All right, so the valuation and recommendation and risks. We use an enterprise value to revenue multiple of 12x on full year 27 estimated revenue to estimate the target price for Railtown AI technologies, to account for potential equity financing needed to fund the business until it generates sufficient free cash flow. We apply a 20% dilutive factor. Given Railtown's first mover advantage and the proven track record of its founders and senior management, we believe there is a high probability of capturing significant market share over the next 3 years. Significant market share. We project a higher adoption rate of Railtown's platform in the US of A compared to the rest of the losers, the rest of the world, due to a higher return on invested capital for users in the United States and the timing of the launch. We use a market penetration rate of 3% in the USA and 0.5% elsewhere in the world to forecast the 27 revenue. Based on these assumptions, we estimate the target price for Railtown to be United States dollar $2 per share. We initiate coverage with a speculative buy rating, acknowledging the risks, key upside risks. In other words, what things could make this better include higher than expected adoption of Railtown's platform, improved unit pricing, leading to high average revenues per user, and a higher valuation multiple than anticipated. Let's talk about that. Higher valuation multiple than anticipated. They're using 12. The average is 25. You know, kind of gets a different number. Key downside risks, which we got to be aware of, include lower than expected adoption, higher than expected dilution, and of course, as ever, when you're a small company and you run into the challenges of dealing with the voracious appetite of the criminals, you might have funding challenges. They talk about competition risks, that's ever present anywhere. And you could have slower growth if there's an economic blow up. And then let's just quickly read the company overview, and I'll take a break from reading this report just to look at some of your comments. Company overview. Railtown is a technology company. It develops artificial intelligence tools tailored for software development. The company's AI model is designed to understand various aspects of software development comprehensively. Railtown AI offers both cloud-based and on-premise deployment options to suit different organizational needs. The platform is notable for its quick processing, enabling real-time decision-making. It also learns and improves over time by analyzing data provided by its users. Furthermore, Railtown's AI platform can handle multiple types of data, including images and customized reports, which adds to its utility in diverse development environments. I'll take that down. And I'm going to see how many messages I lost by doing that. Not any. That's good. There's Augustin. Hello. Darren, Narad. Oh, let me turn this on so you can see each other while I'm blabbering. Brandon, Adam, what's going on with GameStop? Well, let's find out. Let's find out. Hey la di la da, hey la di oh. You know, I'm looking at Railtown trading, and the way it pops around, you know, it looks spoofing. It looks weird numbers. It's like computers are involved. It's quite algorithmic. And I would submit to you, one of the reasons it doesn't spike as you're buying is there may be some of this, you know, this day trading crap of short selling. It's not a short seller's play, but what it means is it's giving us time to acquire Railtown at the nice price. That'll stop at some point. When the difference with Railtown versus some of these other stories is when the knowledgeable, the experienced, the big pools of money, and the AI-centric investment teams start buying, it's the day trading short selling won't be able to keep up. It just won't be able to defend itself. Let's look at, it's at GME, I forget. Why am I forgetting? Yeah, there it is, GME. $22 down 6. Well, there it is, Adam. And I have to say, I'm a broken record on this. I get a lot of heat. People pop up in my live to get you to start buying. Hey, GME's moving, GME's moving. Got to be in it. Great story. You got to recognize those people probably work for the shorts, or they work for the investment banks, or they work for the offshore traders. Because what they're trying to do is create buoyancy in the stock price so Cohen can do a bloody deal. That's what it says here. GameStop shares are trading lower after the company announced a $1.7 billion. How many times are you going to be suckers about it? Proposed private offering of convertible senior notes. Hey, they're going to have another $2 billion. And they already have 4.75 billion. They have 5 billion. They're going to have $7 billion, and they're buying Bitcoin. God. Let's see how many shares are outstanding. The market cap is 13 billion, and maybe half of that is cash. Is it worth it? You're saying that this guy's genius? A bunch of stores that are losing money, as far as I can tell. They don't have customers. At least they don't have walk-in. Well, I will admit I was only in the mall for about 3 hours, so maybe it was the day. But they don't seem to have customers. And got a lot of shit on the shelves. I can't see the number of shares. Maybe my service doesn't give it. But anyway, it doesn't matter. You got 13 billion in market cap. Call it 6 billion in cash. I think it's overpriced. But people disagree with me. It's the greatest. Brian Cohen is great. It's going to be the biggest short squeeze. It's out of control. It's unfair. The markets are against us. We're going to win. Maybe. But every time they run it up, they do a deal and it comes down. It's like a bouncing ball, only each time the ball doesn't bounce as high. And the floor that the ball's bouncing on is going down. It's like it's on a slope or something. So, you can jump into GME every time it starts running and hope you're catching the move. And people come on here and try to get you to believe that. But all I notice is every time it's gone up for a while. And my opinion, Adam, if it goes way up, you'll see a deal done more quickly. If it takes a while to climb, they're just selling stock to you as you're buying, as everyone comes in and says, oh, GME looks great. What's great about it? What's great about the GME story? Ryan Cohen? What's great about the story? It's at least half of that market cap shouldn't be there. At least half, in my judgment. But I think that's a $5 stock, $6 stock. But they're going to buy Bitcoin. Well, why don't you just go buy Bitcoin yourself? Why do you have to buy Bitcoins through a company that's saddled with leases they should get rid of? And it probably cost them $2 or $3 a share to unwind all of that crap. And they're in a niche business. Well, they got the best game consoles. All right, maybe they do. That might be the only compelling thing about the story, but that doesn't mean they're not overpriced. It doesn't mean they're not overpriced. My friend Theo You're going to be your friend Theo's greatest friend. I'm going to write down Theo, and I'll write Pete the Greek. And it's 50,000. Awesome. I think a friend of mine told me he thought that if you own 50,000 Railtown, and of course he didn't give the time frame, but he said if you buy 50,000 Railtown and hold it, you might be able to retire. That's what he said. I haven't, I guess I can try to do it now, but I haven't done the arithmetic on that. But I think 50,000 shares is an excellent position. And if you're Sparky 73, he would probably tell you it's a excellent starter position. I'm just teasing. I think it's great. I think it's a perfect size. Yeah, DJT. I wouldn't give up on DJT. Adam M. Yeah, he's not for retail. Nobody's on. There's nobody on Wall Street for retail. Merrill Lynch, Charlie Merrill started out looking out for retail. And I think at Legg Mason, I think those guys had great integrity for retail. And maybe this Edwards is designed for retail. And, there's some smaller companies. I have a friend works out of Charlottesville branch of the Davenport and Co. These kind of companies, I think, have retail. Of course, it's a question of which size retail. But even Charles Schwab, I don't think, is focused as much on retail as the power of having assets under management and making money off the fees in ETFs, for example. 20K, good for you, Pete. I'm going to write that down. I think it's a great number. Sorry to hear about Brian Wilson. Well, I think he's probably more at peace now than he was for most of his life. I was never a Beach Boys fan. I've never gotten why they're so genius. Apparently Paul McCartney and John Lennon thought Pet Sounds is an album. I don't even know what Pet Sounds album is. Wouldn't it be nice to be it's just not my kind of music. It's more for guys that wear their sweaters around their neck with the sleeves casually tied in the front and no socks and loafers and bring a poodle to class with them. That's how I see Beach Boy music. But it is sad. It also brings up a question. Who's going to listen to classic rock radio when we're all gone? They're going to have the screechings of an angry young woman, Taylor Swift, and the badly aging Britney Spears. I don't know. There's going to be a big gap in music. Of course, they'll have some of the great rap songs. And my guess is there'll always be country. There'll always be blues. When will Ham talk about finger motion? I don't know. If you go on Twitter, you can search using the symbol $FNGR, and if you scroll down there, you will find Ham. Repeated entries by Ham. I don't quite know his latest handle. It's probably something like Ham Short Killer or ham at ham short killer, or ham kills shorts, or something like that. In those posts, you will find a announcement for a conference call. It'll give you a conference call in number and a conference call ID number, or whatever that second number is referred to. Call in, enter the code, and you can listen live. Alternatively, you can go to his pages, probably Chris and Shaughnessy's pages, maybe Giannis's pages, and you can see recordings of previous conference call-ins that he's done, and he probably has 1 or 2 a day. So, Adam, I'm sure you're getting up to the minute information on Finger if you just avail yourself to Twitter. Hey, Eddie. Hey, Scott. Hearing any? Yeah, thanks for coming in with that. I don't believe you've been out of the loop. I wonder why it is you guys want to bring up negativity. Is it because you're short Railtown? I didn't think Railtown's a short play, but whatever. All I've heard on Logic, and it's my single largest position by shares, not by value. It's a complete wipeout. All I've heard about Logic is, I think, a very Pollyannish acceptance of, I didn't hear it firsthand, I heard it third or fourth hand, of the CEO, the previous CEO's, Brent Sun's assurances that the acquisition of Meta, let me just look it up. It's a waste of time, Bare Feet. I don't know. Do you work for a living? Do you produce? Or do you sit and gaze at your navel? Because looking at things you've lost in and just focusing on it, and I've told you it's dead. My opinion, Logic is a complete crap out. Brent Sun abandoned it and made bad decisions to get out of it. And then he focused on Nixie. And but anyway, let's just do it because you're asking. We'll use Yahoo. That usually has a pretty good list of news. Okay, 4 months ago, 7 months ago, they acquired Evamate, but 10 months ago, Logic finalized the acquisition of MedLab. So you didn't miss anything, Barefoot, by DC. If you've been out of the loop, getting stoned, you didn't miss anything. But Logic finalizes acquisition of MedLab Essentials in a $100 million valuation deal 10 months ago. Now, the problem is that what Brent did is he doubled the amount of shares outstanding and took money from MedLabs. Aubrey Advisors, I think, intentionally, along with their clients and along with the other Chadron Financial, in the SPAC sponsorship, I think they set it up to steal 150, 200 million out of the market cap of Logic / collective audience. And I think they've succeeded. They brought in a CEO who stubbornly or otherwise went along with the game, and collective audience gapped open for a day, at $42. But you can't trade it now. It's worthless. And the guy that runs Aubrey, reportedly, I haven't seen it, but I've been told by several people that the guy that runs Aubrey Advisors owns 93% of collective audience. It really seems like self-dealing. It seems criminal. But I don't want to get caught up in a fight, going into lawyers, hiring Mark Bazile. It raises money, having space calls. A year and a half later, they settle and the shareholder has nothing. It's just pointless, Barefoot. There's no avenue to make money. Once it goes legal, you're not making money anymore. Once you constantly bring it up, it doesn't take much legal. You know the symbol of logic. You go to your phone, you bring up Yahoo Finance, you type in LGIQ, and you see there's no news. You haven't missed anything. But anyway, this med lab is run by a guy who speaks Russian, Hebrew, I think English. I'm not positive. I think English, a little German, and I think one of the other Romance languages. He started med labs at the same time the SPAC started. I'm guessing he's Jewish. Oh, you can't say that. Well, I said it. The Aubrey guy, I think, is from Iran, which probably means he's Jewish. Well, why do you point that out? I think because it's offshore. They're more likely to meet each other. And maybe they know each other, or maybe once they meet each other, they're comfortable with each other. I don't know. The Aubrey guy lives in Switzerland. So it's all offshore. This was a company that was destroyed, and Brent didn't have the balls or the recognition to say, no, I'm not going to accept your money. It looks like Brent just wanted done with logic. So I think it's worthless. I think logic is worthless. I think the acquisition of MedLab Developments was set in stone by Aubrey Advisors and Chadron when they established the SPAC. I think it was a scheme from soup to nuts to steal the market cap of the company. I think Brent's probably smart to walk away from his handiwork. He never got a single decision on financing right. Never. But, you know, in his defense, how do you do it? Everyone comes at you with a smile. The lawyers always support, the attorneys always support them. The board always goes along with them. And they offer the solution. And their CEOs are just like you. They think that there's systems in place, that the system is looking out. There's rules that protect CEOs, shareholders. There aren't any. I mean, the rules might be there, but they're not enforced. So my evidence, which I will admit is circumstantial, but it's the evidence that I see before my eyes, is that Aubrey Advisors, which is a huge firm, their client Polar, and Chadron, and the attorneys and any introducers, along with the board members that came from them, had a strategy from the jump to steal everything, and that this Med Labs was part of it. That's my opinion. Prove me wrong, I'll change my opinion, and I'll effusively apologize. But I think logic is completely wiped out, completely stolen. The only thing I've heard relatively recently, if through fourth, fifth party, is that Brent believes at that time, whenever he spoke to whomever, believed that this is a good deal, that the deal, they are going to work hard, they're going to move to NASDAQ, which implies 100 to 1 reverse split. That means 100 shares that you own becomes one at a minimum. And if you think that's going to help you, I think Brent, I don't know what la land he's in. But if that comes, the stock will be $1, and then they'll drive it right back down. And anyway, the positive I hear back that Brent has told others, I don't know how long ago, is that the stock has a chance of getting to 20 cents a share. I don't believe it at all. And I own quite a bit of stock, and I never expect to see anything out of it. And Brent put his focus and his deal flow and his investment banking contacts entirely in Nixie Inc. NIXX is the symbol. I think if you're trying to make money back in logic, Nix is a place to go. However, Nix just, I didn't see it as an announcement, but it was on Twitter that they, let me read it to you. Somebody sent it to me. Oh, and it's not there. It's here it is. It's on Twitter under a heading of SEC Filings Digest, SEC Filings Digest. Nix resignations. Nixie Inc. reported the resignation of its independent auditor, Sahlberg and Company, on June 2nd, 2025, with no disagreements or reportable events noted in its service. The auditor's report includes concerns about the company's ability to continue as a going concern. They also, the same guy, announced that Nixie announced a registered direct offering of basically 850,000 shares at $1.50 with no commission. So those are two pieces under SEC Filings Digest. And I would just caution with Nixie that when an auditor resigns, it may not mean anything. Look, for example, in the case of Finger Motion, it didn't mean anything. And the new auditor found nothing wrong, but it involved time. That's all I caution, is that at a minimum, it's going to involve time. But a place to, if you're one of those investors, I lost money with Brent, therefore I have to make my money back with Brent, Nixie's a place to do it, maybe. I think you're going to have to wait. I don't have that attitude. I think that we're here to make money, and you have to try to suss what is the best risk-reward opportunity each morning if you're a day trader. And right now, for me, I've been emphasizing Barefoot by DC. I've been emphasizing Railtown Technologies, RLAIF. It trades for 40 cents. And I think sometime in the near future, on the near horizon, it'll be a $4 stock. Now, my number was $3.50 when the stock was 30 cents. 35 cents, and my number was $3.75 yesterday when the stock was $3.75. Today it's down a little bit. Just to make it a round number, I think it'll go from 40 cents to $4. I think there's a 10x in Railtown AI shortly. I can't define that shortly, I don't know. But I think before Nixie gets up off of its haunches. Logic is never going up, in my judgment. Logic is a total stealing by Aubrey Advisors and its clients. And I think Logic will be the same as GTII or CRTD or MULN or any of the hundreds of companies that are destroyed by short sellers and criminals and collusion and people that come on Twitter and people that come on the spaces, and they just go hammer, hammer, hammer. But it sounds like you're a guy, you're out of the loop a lot. I don't think you should be buying stocks barefoot by DC. I think if you're out of the loop, just put your money in an ETF, or if you really want to go out of the loop, go buy physical silver, set it and forget it. Buy 100 ounces, buy 500 ounces, buy 1,000 ounces of physical silver. You know, put it in your laundry room or in your wherever you want to put it, or store it. Pay for storage, or don't even accept it for delivery. Pay for the Brink storage, but get silver, and then you can go about your life of being out of the loop and not paying attention to your investments. And I think you'll come back within 5 to 7 years, a wealthy man based on silver. But if you're here just to get people thinking and wasting time on fucking logic, you did your job. She's fear-mongering. Oh, for that Compre Figleri. I don't know. I think that's something you're right. You have to look out for is, does the person running the video, is their goal to get eyeballs? I've listened to her a bit. I don't know her, so I can't really tell you with any confidence. But I don't think she's fear-mongering. I think she's really frightened for the people that live in houses above that caldera. But, you know, timelines on the planet are eons, you know. It's the last time that volcano apparently erupted was 1534, I think it was. So it was 500 years ago. So it's probably another 500. You know, you're right. She might be. Justin now has 4,450. That's great, Justin. I wish you could look at my account. Should I sell Nixie to buy Railtown? Wow, you have 312. That's amazing. You're going to be the richest guy out there. You can run some scenarios. I guess it's a good time to make my Jennifer disclosure. I am not a consultant. I do not have a contract. In fact, I haven't spoken to anyone at the company called Railtown Technologies. Further, as you know, my videos are all my opinion, their strategy, their editorial, I guess, educational maybe. But I can't give financial advice. All of the disclosure statements you've ever read on a financial product, I seek the safe harbor of. And let's go from there. Now, I think you could take a lot of scenarios with your 312,000 shares. But let's take this research. I'll finish reading the research report. I was getting frustrated because my eyes don't quite. It's weird. They do right here in this distance they do, but in the distance and then when it's really small, they don't quite talk to each other. So I screw up my reading. I'm also not, a professional reader. But anyway, if we take this research report, which was written a year ago on Railtown Technologies, and based on the organic growth that analyst saw, and that, by the way, I've been assured that research report was independent. It was not paid for. This was back before, the gentleman I sent it to me had a pretty good summary. That research report was written long before the AIP deal and before SOC certification, and this recent announcement that got them involved with the London Stock Exchange. But just if we could just be fanciful, Steve, and his target is $2. Now, the way I read his research report, he's not saying you have to wait 3 years for that $2 target. He's using 2027 earnings estimate to come up with that target today. Well, a year ago. That was at $2. That was at 12 times revenue. If we go to 25, if we go to 24, so I'm going to double that. So instead of $2, we call it $4, which happens to align with I've given you estimates. With 312,000 shares times 4, you got $1.25 million. And you know what's going to be so hard for you? And it's going to be hard for me because in other situations, your account, like let's say when CRTD went to, what did it go? $2, two and a quarter. Your account might have been $1 million then. I'm making it up, but then it's collapsed to nothing. Or if you got into, I don't know. I don't know which one to compare it to, but a lot of these manipulated stocks, a lot of these short squeeze plays, they run up, and your account, for example, could be worth $1,250,000. And the lesson is get out, take it. As Warren Buffett said, if it's good enough to screenshot, it's good enough to sell. But I think what's going to be really odd with Railtown, Steve, and so only you can judge this for yourself, but if it goes from 40 cents to $4, I don't think that's the move. I think that's the inefficiency of price discovery in our markets, combined with the fact that the only buyers who have any brain power here, have any technology experience, have any sizable money, have the research reports, have the trading desks, have the investment bankers, have the mutual fund, all the funds, all different types of funds. They can't buy right now. They can't buy right now because there's a merger going on. And so you're looking at a stock at 40 cents that I'm saying should right now be $4. Now, I'm not saying it's going to go straight there. That's a huge jump, but it could go straight there. I would expect the path upward is going to be breaking through 42 cents, let's say. Remember, it's not exact because there's also a currency change. It's a Canadian company. So the US number is also effective. So the Canadian stock price is the one to be following. But anyway, I think to go through 42 cents is the obvious next step. I think when it breaks through that, it's headed to 60. That's the high. I think it could pull back. It could dance around there. I don't think it's going to pose much resistance, but that's a place where it could go to and then pull back. It could overshoot it, pull back. It could just go there, pull back. It could be a little bit. I don't think it's going to be significant, but you got to remember, if it goes around 60, there's always a chance it pulls back to, the high 40, or even the low 40 cents range, back to support. What was resistance becomes support. Once it breaks 62, let's say 65, I think it's going to, the logical number is $1. I don't think that's it. I think it'll at least double, maybe $1.20, $1.25, $1.30. I think it's going to be powerful. When it gets there, it might pull back to 1. You're going to start seeing different people getting in. There's going to be a little bit of buzz about it. And you're going to feel so proud to own your shares. You'll be comfortable in your shares, Steve. You're going to be like, man, I'm the man. But if you wait to buy, you're going to be nervous. In other words, if it runs to 125 and you buy at 130, and then for some reason some sellers come in, it might pull back to 80 cents. You're going to be going, oh God, I'm losing. What do I do? I can't stand it anymore, and you'll sell out. By getting in here, you give yourself an emotional buffer for that kind of volatility later on, if it happens. But I really think where the stock is going to probably run into both, but I don't know how much supply is out there. I don't know how much. I don't know anyone selling. But I would pick the $2 number as a significant spot. That is usually in most accounts, at least online, where it becomes marginable. Now, I agree with this research report. There's always a risk that the company raises some money somewhere along the line. Does it do it at 1 or 2 or I don't know. I'm not scared of it. But $2 is significant from what I hear, that at least overseas, family offices can be interested at $1, but they will look at $2 stocks. It's interesting too because it becomes marginable. So people, if they want to buy more, they can do it. Then it's risky, but they may well do it. Once it becomes marginal, you have to be careful. And I'm not recommending people use margin in this stock because the criminals will know you're a novice at margin. And if you increase your position, they'll spike it down so you have a margin call that you can't meet and you lose your stock. So I really don't recommend using margin unless you're a pro or unless you're wealthy. In other words, you have some cash you could bring in to quickly meet the call. But anyway, I think $2 is a reasonable, if you want to stair step this, I would say 60 cents, $1.25, $2. Just go by dollar numbers, $3, $4, $5. $5 is huge. Once it hits $5, the Merrill Lynch rule is off, and you'll see the thundering herd of wealth advisors being able to recommend the stock specifically. But I think by then, there'll be a lot of money that the wealth advisors have convinced their clients to put into new products dedicated for AI. So they will have already gotten you into AI investments generally. Those general pools of money will come by companies. I think Railtown will be, I don't know if it'll be at the top of the list because I don't know what's at the top of the list. NVIDIA, but it'll be in there, I think, by that time. There's just going to be so much money, in my judgment. They have to go where the product is, and Railtown will be the product. What I was trying to say, Steve, is I don't think it's going directly to 4. 4 p.m. one day, next morning it opens up, and by 10:30 it's at 4. That could happen. That could happen. I'm not saying I've seen things like that, but I'm saying it's probably going to stair step up. But the interesting thing about the stair step is I think 60 cents it'll blow through. If it gets to $1, I think it'll blow through that. But at $1.20, $1.30, it may pull back. But I think there'll be some buyers that currently are not here that'll feel comfortable above $1. So it's possible that $1 becomes the new floor. I'm not saying literally, but we've sort of been at a 30-cent floor, give or take, for a while. Maybe $1 becomes that floor. It's, what do you call it on a stair? As you go up the risers, you have a ledge, a step. It becomes the new step, I guess. There's another name for it. Then I think as it goes up, I think you can just use the round numbers, $2, $3, $4, $5, $6, just to get through my point quickly. And I think $4 becomes a new step. I think once it reaches $4, it's not coming back to 30 cents unless the whole world goes into some attack from Mars or something. So once it gets to $4, I think that's, or $5, it might be $6, but that new level that it goes to, that's where the growth story is going to start. That's where the research reports and the buying and the hubbub is going to start at that level, and you'll have already 10x'd your money. You'll have already 10x'd your money. So you can absorb some of the fluctuation. But that's my point, Steve. I think from $4, the stock has a chance to do 10x again. I'm not saying that's the hardest thing. This is not necessarily going to be a stock where you have to have hot hands. It might be a stock, and now if it gets out of whack, you sell and it comes back, you buy more. But this might be a stock that you buy, and you buy right and sit tight. You buy right and sit tight. So I think it's great you have 312,000 shares. Now on the Nixie, it's the same question I faced. I thought Nixie was going to be, I'll give you the target I thought Nixie was going to be. I thought it was going to be $12 last month. Well, and by now in this month. It didn't happen. Perhaps it's because of that auditor. I don't know. There's some things I heard were going on. I'm not going to talk about, but it didn't happen. And Nick, when I first heard Nixie, it had a beautiful setup, but I guess I don't know if for some reason they invited in the short sellers as advisors or something. And that short seller screwed the first time it ran, totally, for his own profit. But they all thought somehow the Scorpion would change its stripe. So the first run-up got sabotaged by one man making his profit for himself. So that was in, I don't know, October. And then it tried to run again earlier in the year. I don't know why it stopped. Well, this time, I don't know either. But Steve, what I think about Nixie is that the revenues are really powerful on Nixie, really powerful. If you extrapolate 10 million a month, it's 120 million a year. Just at 1 for 1, just at a multiple of 1, the stock should be 3 times where it's trading right now. But I'm hesitant because of the auditor resigning. In other words, I don't know the answer why they resigned, but it brings in a risk to the position that it might interfere with some of the acquisitions. It might interfere with the reporting of the revenues. I don't know. I don't know. But it's a red flag. I do think Nixie's going to take time now. Is it 2 weeks? Is it 2 months? Again, I don't know. But it shocked me. I sold Nixie last week at 206 or 207. Before it ran up, I knew it was going to run up, and I'm like, darn it, I'm going to miss out. I had no idea about the auditor, none. So I actually stopped looking at quotes because I just didn't want to see that Nixie went to $6. I just stopped looking. But for me, that was the right decision to make, regardless of what Nixie did, because I got into Railtown, and it's not a big amount, but I got into Railtown at essentially 33 cents, just under 33 cents. And to me, Railtown is going to run. It's just an awareness issue. When does a herd of cattle stampede? When does the snow on the side of an Alp suddenly avalanche? When did young, beautiful women decide that destroying their body with tattoos made them more beautiful? I don't know, but it's people. When does it turn? When does it turn? By the way, everybody loves tattoos. I'm just an old guy. When does that perception turn? It's inexplicable. I think it's going to happen in Railtown. I thought it could have happened today. It didn't. Now I would say it's Monday. I would say my next worry point would be Monday. It could be tomorrow though. Railtown's going to go up, boy. It's going to go up. I don't know when, but it's going to go up. And so if you sold Nixie, let me see what Nixie's trading for. Of course they signed me out. Of course they did. Why wouldn't you? Why wouldn't you sign me out? No, all right. It's a different service. Nixie is 183. See, that's one of the things last Thursday I was sitting thinking, if I go 2 weeks, Nixie might go, that's the number I thought, it could go back to 180. And then Railtown, if it just stays here, I'm not going to be able to buy as much, and Railtown could go up. So at the end of the day, at least in this short 1 week window, it looks like I did a reasonable trade. But there's 2 things to bear in mind. One is you're not going to get it right. There's always going to be, I could have done that, I could have done that. You're just not going to get it right. So you got to block out. Once you make the decision, you got to block out um, you got to murder the alternative, as my dad would say. You got to murder the alternative once you make a decision. And it's a shame that Nixie's down. You're worried that it can bounce back up. There are things ahead for Nixie that could make it quite valuable, and maybe overnight. At least I think so. It's in the news, you know, you just read the news releases. I think that auditor thing adds time, just my experience. I mean, look what we went through with finger motion. So acknowledging the risk that Nixie could go back to 2 or 250 or higher, I think it's $1.83 on the bid right now. I think you've got 29,000 times $1.83. I can't give you financial advice, but that's $53,000, Steve. And right now you could buy, and Railtown's down. Railtown's down. Nixie's down, but Railtown's down, which I can't believe. A penny, I know it's not a lot, but Railtown is 36.79. Let me write that down. 36.79. I can't believe it. That's so pounceable. I wish I had money. I wish I had money. I'm envious of you. I'm envious of you. I can't give you specific financial advice, but I can tell you if I owned 29,000 shares of Nixie, I would likely do exactly what I did with my 2,000 shares of Nixie. I would sell that. I would get 53,070, and then I would buy 0.3679. You could buy 144,000 rail. I'm not sure you'd get it all done at that price, but you buy 144,000 at rail while the algorithms are suppressing the price. And you add that to your 312. You would have 654. You'd have 456. Let's call it 450,000 shares of Railtown. My gosh, I would jump on that all day long. I would do that all day long. So let's see. Does Nixie give you diversification? Does it remove risk from your account? I don't think Nixie's going to go much lower. I mean, it could go to 160. I don't see Nixie, but it could. It could. There's a big unknown. Why did the auditor resign? Why did they raise money at $1.50? I don't think there's any risk in Railtown. Now, this is in the giant bubble of high-risk companies. You know what I mean? So I'm comparing highly speculative companies to each other. But if you know, I don't know how sophisticated an investor you are, but this research report I just read to you is it's a speculative stock. But Railtown, I think, could pull back. Every stock can pull back, but I just don't see it pulling back much, nor do I see it staying there. Nixie could stay here or pull back and be there for weeks or months. I don't know that. That's the risk. So if you sell it, you're going to be pissed off if suddenly it's $4 or $5. And that's a decision, only a decision you can make. But what I faced is, yeah, Nixie, I didn't know about the auditor, by the way, but the 2,000 shares, I can sell it, and it was going up. And in fact, I could have sold what, at 230, 240? I didn't look, it went up. But I was thinking, all right, what if Nixie goes up? Let's just use an example. Let's say Nixie goes to 3 and it takes 3 weeks. I think Railtown could be $3. So right now, your 29,000 shares of, you got to forget about prices and profit. How many shares of Nixie can you, if that's what you want, if that's what you're thinking about, how many shares of Nixie translates into how many shares of Railtown? And if you wait for Nixie to go green in your account and be profitable, let me just use an example at $3. I think there's every chance you'll look up and Railtown's $3. So I'm just making up, it's impossible to create the future. But then right now you can buy 144,000 shares of Railtown, roughly, with your Nixie shares. It's possible, even if Nixie does well, that when you turn around to buy Railtown, then you're only buying 30,000 shares. So only you can make that. Is that worth it to you? I would tell you that if you somehow got to 450,000 shares of Railtown, and Railtown went to $4 or $5 over the next, indeterminate period of time, I think in the summer, it could happen before, it could happen before you collect your next paycheck. I don't know. We don't know. We're dealing with unknowns. But if that 450 went to $4, let's use that, you'd have 1.8 million. Let's just see what that is if it went to $5, which I think that's what Railtown's going to do. You'd have $2.25 million. Now, you could sell if you wanted to. I don't think you're going to want to, even though Tony DeGennaro makes fun of me for saying that. I think it's going to be a strange stock when it's up and you're feeling rich. The information might be so strong at that time. You have to decide then. I think it could be so good that you're going to say, I don't want to sell. But let's say you sell 25,000 shares out of your 450 at 5. It's 125,000. Let's say let's say Nixie at that point is trading for $3. Let's say it's trading for $3.50. You can buy 35,000 of Nixie and get back in the position. So your risk is, how long does it take Railtown to get to 4 or 5? And will Nixie stay down or relatively down in a broad range? And I'm telling you that Nixie could stay in a range from $1.60 to $4 for the next 60 days. If Railtown moves the way I think it's going to do, you could then sell on the margin of your Railtown, reestablish your Nixie position, maybe at a higher price. But if you're still thinking, I'm in 5th grade arithmetic here, and I'm trying to get Nixie to give a positive number, you're not thinking the right way, I don't think. You're trying to make money with your account. And if you think of it in terms of how many units of Railtown, how many units of Nixie, and what's the trade-off, I think you'll find that switching to Railtown now will give you more, much more of a position in Railtown, many, many more units of Railtown, so that, in my opinion, when Railtown goes up, you can sell some of those units and end up buying more units of Nixie than you have now. But you may find out when you're there, you don't want to come back to Nixie. It's a very long answer, but I think you're going to have, Steve, I think Railtown could be 350 in 2 weeks. 2 weeks. And going up during it. Tomorrow, you might have to pay 50 cents for Railtown. Monday, you might have to pay 70 cents. So while you're deciding, the number of units you can buy is rapidly declining. And I think that's what you're going to face. Am I going to be right? That's the call I made. You have to make your own call. I can't, you have to make your own call. I believe any morning, any day, any weekend. Why, Steve? Why? It's a little like that volcano, Campe Fligare, however you say it. It's bubbling. It's bubbling. The caldera is expanding upward. The lava is expanding upward. The capstone is breaking. There's water bubbling. The gas is steaming through houses, and Etna had just had a explosion. Is it going to erupt? Well, it's all the pieces are there for it to erupt. So one morning it could erupt. But every with a volcano, eons are longer. But every year that goes by anyway, you're getting closer and closer to that eruption, closer to it than not. Well, in this stock, Railtown, I don't know how I can get it across. Let's go over it one more time. Let's go over it one more time. Let's go over it one more time. The thing you have a hard time with, everybody does, is you believe that the stock price tells you something. I don't think it is telling you. You have to come up with what you think the stock is worth right now. And then you open the stock quote and you see, oh my gosh, it's underpriced. It's the wrong price. I've shown you, and I'll do it. Let's do it with the numbers he gave. Let's just do it with the numbers this analyst gave. He said the addressable market is 3 billion, and they can capture a significant portion of it, and it's growing. So what's significant of a 3 billion market? So what's a significant portion? They're the first movers. Would you say half is significant? You probably would, wouldn't you? But you might also say that's too much. Would you say 25% is significant? I'd say that's a significant portion. Where's the cutoff where it's not significant? Would you say under 5% is not significant? I would. Would you say under 10% is not significant? I think I would, because if 10% were significant, that would mean it's a highly to be significant, the marketplace would have to be highly fragmented. But I think 10%, they're the first mover. So they're going to be the best. They're going to claim most of the market. But if the market's overly crowded, what is significant? 15%? Let's just use 10%. Why don't we just use 10%? So it's a 3 billion addressable market. 3 billion addressable market. That's according to the analyst from a year ago. And we'll assume that Railtown, we're not talking about AI partners, we're just talking about Railtown, gets 10% of that. And we'll call 10% significant, although I'm not sure that's significant. I think significant's like 30 or 40%. Let's just use 10% as significant. So that means Railtown will be doing 300 million a year in revenue. That's according to this other analyst a year ago. 300 million. He said significant. Is that significant? Anyway, let's use 300 million. Now, he used 12 times revenue. I'm going to show you that's way off, but let's use 12 times revenue. $300 million times 12. That's 3.6 billion. And then I need to, the amount of shares outstanding are 139 million. According to OTC Markets. And this guy, the analyst, expanded it by 20%. So we'll multiply that by 1.2 and we'll get 166,800,000. So let's call it 170 million shares outstanding. So we'll divide that by 170. So we'll do 3.6 divided by 170 million. And it gives a valuation of $21 a share. That's somebody else's. Look, he's saying, I just read it to you a year ago, that Railtown's, without AIP, without the announcement they just did this week, for example, but he's saying that Railtown's addressable market is $3 billion and they're going to get a significant percentage of it. I use 10%. So that's 300 million in revenue. And he's using a multiple of 12 times. So that gives 3.6 billion. He says that you have to allow for issuing more shares. So I went slightly higher than his number. So we estimate the number of shares outstanding at 170 million instead of 139 million. That gives you $21 a share. Now, you're saying, yeah, but when? That's what you're saying. When does that happen? Well, my argument is, and because you don't understand AI, most of the people here don't understand AI, I don't understand AI, we figure it's going to be a slow acceptance of this idea. Look, the research has already been out there for a year. They are already earning money. I don't know how much. And the only thing that's holding up is this acquisition. So it's a perfect storm for us. But when does it go to 21? When? Well, you know, let's take that question out of there. And we'll just take a third of 21. That targets $7 a share. So we'll adjust the risk of when to $7 a share. We'll take a third of that number. All right, you don't like that. We'll cut that by half. That gives, again, it gives the $3.50 target for Railtown now. What does now mean? What does now mean? Now means I think now means a couple of things. Both interrelated. I think now means on February 11th, 2025, Railtown AI Technologies announces Memorandum of Understanding to acquire AI Partnerships Corp. What is AI Partnerships Corp? Let me, there's a website, and it's www.aipartnershipscorp.com. Let's just read through a little bit of that. The front page of www.aipartnershipscorp.com, and I encourage you to do your own due diligence. It starts out by saying, hello, we are AI Partnerships, a global affiliate network of 160 plus AI solutions providers. We provide AI-based product solutions for businesses. Our affiliate network strength, point one, bullet point. 160 plus companies providing AI-enabled products and services. Bullet point two, focus on key industry sectors and sector agnostic AI products for all businesses. Point three, presence in over a dozen companies. Point four, over 1,500 clients served by our affiliates. Again, at aipartnershipscorp.com. The challenge, adopting emergency technology can provide challenges to both the buyers and the sellers. Many buyers have limited experience, sounds like us, in implementing AI solutions, while many AI service providers have difficulty in articulating the business proposition for implementing the solutions that they've created. This is the challenge with AI. We are here to bridge the gap between buyers and providers of AI. We can be your first step in the complex journey of implementing enterprise AI. We are the B2B, business to business matchmakers of everything AI. And then they have a bunch of questions. He says, view our catalog. I'm not sure I got time for that, but their affiliates are in manufacturing AI, financial services AI, healthcare AI, sales and marketing AI, construction AI, agriculture AI, customer experience AI, real estate AI, aerospace AI, utilities AI, retail AI, telecommunications HI, human resources HI, customer service HI, automotive AI, accounting AI. And then their technologies that their networks encompass. They have network and technology. They have machine learning, computer vision, NLP, no idea, automation, data management, data processing, data engineering, data analytics, data science, speech recognition, cybersecurity, deep learning, VR, whatever that is, and 3 others I can't read. How do we help you as an enterprise? We help you with operational efficiency, customer retention, customer acquisition, product development, feature development, decision making, which you need that help. Predictions, so do I. Predictions, insights, AI strategy becomes data driven, and there's some stuff I can't read over there. AI and ML tools, resolutions, I can't read. There's some stuff I can't read. Better infrastructure. Here's just a few of the clients. Here are just a few of the clients served by our affiliate network. This is at AIpartnerships.com. You wonder where you can buy AIpartnerships.com? You can't. You can't buy it. Why? Because Railtown's buying the whole bloody thing. Here's some of the clients served by our affiliate network. Allstate. Heard of them? Verizon. Heard of them? PwC, PricewaterhouseCoopers. Bank of America. American Express. Volvo. Walmart. Samsung, Bed Bath & Beyond, some company that has a whale jumping out of the ocean. Is that Pacific Life? And then there's others I can't see. There's a layer of them I can't read. There's FDA, I don't know what that is. Northwest Mutual, Nissan, United Healthcare, MGM Resorts, and there's some others I can't see. Comcast, National Geographic, Pizza Slut, AT&T, JW Marriott, St. Regis, and they're based in Toronto, Phoenix, Portland, San Francisco. They have affiliates in 12 countries worldwide. Hey, that sounds great. AI Partners sounds like the stock to be in. How can I buy into that stock? Well, you can't. You can't. All right, here's the team. Here's the founder, Michael Nobrega, former president and CEO of the Ontario Municipal Employees Retirement System. That's OMERS. One of Canada's largest pension funds with more than $100 billion in assets under management. Previously served as president and CEO of Ontario Municipal Employees Retirement Systems, wholly owned subsidiary, Borealis Infrastructure Management, Inc. Now, let me just ask you, Steve. OMERS, that's the Ontario Municipal Employees Retirement System. Do you think they're going to take a phone call from the former president of their own organization? He was the former president and CEO, Michael Nobrega, the former president and CEO of the Ontario Municipal Employees Retirement System, with more than $100 billion in assets. And now he's the founder, one of the founders of AI Partners. Once Railtown acquires, once they get this bloody merger finished, that we're all in limbo on while you're making your decision as if you really have time. I'm not picking on you specifically, me. I wish I had more money. Do you think that the founder of AI Partners, who will now be at least a important phone call of AI part of Railtown Technologies, do you think when he calls the Ontario Municipal Employees Retirement System, OMERS, and says, hey, you know what? I think you need to invest in this. Do you think they're going to take the call? $100 billion in assets. But where are they now, Steve? Where is OMERS now? Why aren't they buying now at 40 cents? If it's so great, why doesn't the Ontario Municipal Employees Retirement System buy it now? Well, one thing, it's under $1. Or it's under $2. Or it's under $3. Or it's under $4. Or it's under $5. I don't know their rule. I don't know their rule. So one of the definitions of now is price. Once Railtown gets to that price where a retirement plan can consider it in Canada, and my guess in the technology space, I'm going to guess it's not $5, but it might be $2. I don't know. I don't know the number. It's probably not $5, but it's certainly not under $1. They're not going to. Why? Because they'll lose their job. If they start speculating in every little stock, they would rather, Steve, OMERS, the Ontario Municipal Employees Retirement System, would rather buy Railtown at $2.50 on its way to $25 than to buy Railtown at 40 cents on its way to $25. Why? Because at 40 cents, it doesn't meet their criteria, but it's risk. It hasn't done it. They would rather that risk gets out of it before they buy. Should you wait till $2.50? Sure, if you want to. If that's how you manage your portfolio. I don't know your portfolio. But my guess is if you're like me, you have to jump the gun a little bit to create a meaningful bit of wealth. So that's what we as retail can give. We can take the risk down at 40 cents, which I don't think is any risk at all, as I just showed you. Let's just go through it again. The analyst at Capital Research says the market is a $3 billion addressable market. And they say that Railtown, before this merger, can get a significant, because they're first movers, because of the quality of their product, they can claim a significant part of $3 billion. I wonder what that means. I think it's much more than 10%, but I'm using 10% of that market as significant. I bet it's 50% or 60%. But let's just go with 10%. That means $300 million in revenue for Railtown. They use 12 times. That's the lowest in the study I purchased. The average was 25. The highest was almost 60 times. They use 12 times. Let's go with it. So that gives a valuation of the enterprise at $3.6 million once the revenues start coming in, once they become visible. They're not visible now because it's in a quiet period. They expanded the number of shares, so I divided it by 170 million shares. That gave $21. To allow for all the unknowns, we divided that by 3. We haircut it, we chopped it by 2/3, and we got $7 a share. And then because everybody's saying, I'd rather listen to Tony No Money or Ramadan in Soups, let's cut that by 2. Let's cut the $7 by half. You get $3.50 a share. Now. So what we're trying to determine, what does now mean? What does now mean? I think now means at least over $1. But maybe the threshold might be higher for OMERS and other retirement plans, other big funds. What's another definition of now? I'll get to it in a second. All right, what's the other founder? The other founder is Dr. Tom Core, former president and CEO of Ontario Centers of Excellence for 10 years. Previously held the joint position of president and CEO of the Accelerator Center, and CEO of the let me just start again. Joint positions of president and CEO of the Accelerator Center at the Waterloo Research and Technology Park, and associate vice president of commercialization at the University of Waterloo. Sounds pretty powerful. He's one of the co-founders. Patrick Horgan, entire professional career at IBM. He was COO of IBM Canada. During this period, he was responsible for the successful implementation of AI and high-performance computer initiatives with the government of Ontario. One more. John Ruffolo, founder and managing partner of Mavericks Private Equity Fund, founder of OMERS, Ontario Municipal Employees Retirement Fund or Service Ventures. He's the founder of OMERS Ventures, an organization he ran for 8 years. OMERS Ventures is the venture capital arm. OMERS Ventures, which John Ruffolo founded, is the venture capital arm of the Ontario Municipal Employees Retirement System, OMERS, with more than $100 billion in assets. John Ruffolo is one of the founders of AIPartnerships.com. And he was the founder of OMERS Ventures, an organization he ran for 8 years. OMERS Ventures is the venture capital arm of the OMERS Pension Fund. During his leadership, OMERS Ventures invested over $500 million in 40 disruptive technology companies across North America, including investments in Shopify, Hootsuite, Desire2Learn, Hopper, Wattpad, and League. Advisors: RLAIF Tanqueray, Toyota, Canada, AI, He's received the Order of Canada and the Order of the Rising Sun. Cameron Schuler, President of Industry Innovation at the Vector Institute. He was the Executive Director of AMII, where for 8 years he led one of the top-ranked machine learning and AI groups in the world. AMII. That's part of Railtown's partnership. It's one of the companies, AMII. Ted Zalowski, an entrepreneur, angel investor, and he's been in everything. Keith Thomas, serial entrepreneur and investor, and not only has he been in everything, he's been all over the world. Sherry Shannon Vanstone, serial entrepreneur, angel investor, builder of high-performance teams, led startups to successful exits in Silicon Valley and Toronto, Waterloo Tech Corridor. She has an honorary doctorate of laws at Western University. The leadership, Dr. Tom Carr, Gary Chan is the CTO. He's got a bunch of things that line up here. Mark Ellingson, CFO, same thing, highly qualified. Stephen Cuthrell, VP Development, highly qualified. Bob Albert, VP Partnerships. A lot of computer background and highly qualified. Dorian Marquet, sales and marketing representative. She's the marketing manager. Or he, it's a he. Leverages his leadership. That's a good thing, to leverage leadership. And then Nicholas Kronke is a marketing manager. Spirit, it looks like, was his main area, but B2C, and he's got a lot of background. So there you go. That's AI partners. All right, so before I move on, Steve, let me go to Rebecca Kurzweil. She's the IR person at Railtown AI. So this is about to get to the second definition of now. The first definition of now is at some threshold of price. Let's just focus on OMERS. OMERS can come in and buy. So on February something, 11th or 12th, Rebecca Kurzweil, at Rebecca Kurzweil with a K on Twitter, she posted, exciting news. Railtown AI Technologies announces memorandum of understanding to acquire AI partnerships. This includes John Ruffalo and OMERS, who are the financial architects of Constellation Software, CSU, $100 billion valuation. I'm not going to read the whole article, but Can Tech Letter put out a piece written by, I forget his name, on Constellation software. And they quoted this guy, Madden, who manages money in this space. Madden called Constellation software a massive compounder, noting it has delivered a total return of 36,000% since its 2006 IPO by acquiring hundreds of niche software firms, acquiring hundreds of niche software firms. What is AI Partners? It's 163 AI firms. And letting them operate with autonomy. Quote, the magic here, this is the author of this report, called Constellation Software has delivered a 36,000% return since its IPO. Is it still a buy? You can find it in cantechletter.com. Quote, the magic here with Constellation software is that this is sort of like a software-focused private equity fund. Did I read anything to you in the leadership of AI Partners that makes you think that AI Partners you couldn't just substitute the words there? The magic here is that AI Partners is sort of like a AI focused private equity fund. Anyway, back to CSU. The magic here is that Constellation Software is sort of like a software-focused private equity fund, but in a listed public company format. Essentially, what they do is acquire mission-critical vertical market software companies. In other words, companies that have deep understanding in specific niches, rather than being like the Mississippi River down in New Orleans when it used to flow, an inch deep but wide. Essentially, what they do is acquire mission-critical vertical market software companies, usually small tuck-in acquisitions of founder-led mom-and-pop vertical market software companies. That's Constellation Software. Those guys, Ruffalo, are here. Did you hear what Rebecca Kurzweil said? Omers and John Ruffalo, financial architects of Constellation Software. They've done it before, but they're now here with AI. Okay, now let's go define the other now. Let's define the other now. February 11th, 2025, Railtown AI Technologies announces MOU to acquire AI Partnerships Corp. That's February 11th, this year, Vancouver. Railtown AI is pleased to announce it has executed a memorandum of understanding for the acquisition of AI Partnerships Corp. A Toronto-based company who has established an affiliate network of over 160 primarily North American AI SaaS companies who provide AI-based vertical market solutions and AI development and management tools. The acquisition will create a dynamic organization which drives substantial revenue growth and scales enterprise AI solutions worldwide. AIP affiliate network operates in 13 countries and delivers AI-based solutions to a diverse client base across multiple industries, including fintech, healthcare, manufacturing, and supply chain management, as well as sector agnostic applications and AI development and management tools. The combination of Railtown AI and AIP is expected to provide both organizations with an opportunity to leverage Railtown AI's Conductor product as a platform of choice for AI application development by AIP's current and future affiliates and their end users. One of the fundamental objectives in the establishment of AIP's affiliate network was to allow AIP to identify and acquire. Do you hear it? Do you hear it? Identify and acquire the best affiliates as part of a broader strategic roll-up strategy. What is roll-up? It's rolling up a bunch of companies into a bigger entity, AIP, but now it's Railtown AI. So one of the fundamental objectives in the establishment of AIP's affiliate network is to allow AIP to identify and acquire the best affiliates as part of a broader strategic roll-up strategy. This transaction, the execution of a memorandum of understanding to acquire AI partnership, AIP, by Railtown. That's the transaction. The transaction is expected to provide the resulting entity the benefit of a public company structure with access to capital as it executes its affiliate acquisition strategy. Do I have to go back and read to you what Constellation Software did? They acquired. They're now $5,000 a share in Canada from $6 or 60 cents. AIP's established affiliate network provides a significant opportunity to grow recurring revenue streams through affiliate acquisitions, which could be enhanced by deploying Railtown AI's proprietary technologies across the affiliate network and its customers. Now, on Twitter, months ago, someone posted that the AI partners right now represent collectively $400 million in revenue. It's been taken down since, I assume because of the quiet period a merger causes. That's $400 million. Do you think they're going to acquire a little bit of that? Or as much as they can? I gave you an example in revenue from that analyst who didn't even talk about AIP partners, based on $300 million in revenue. If they're successful in buying, let me just use the number because I don't want to waste time. If they're successful in buying 300 million of revenue extant out of AIP partners, you can turn that number into 600 million. You could turn it in it if you use more than 10%. But you come down here, these numbers, you can double all of them. This 350 becomes $7, and so on. AIP established affiliate network provides a significant opportunity to grow recurring revenue streams through affiliate acquisitions, which could be enhanced by deploying Railtown AI's proprietary technologies across the affiliate network and its customers. Key drivers of revenue growth include bullet points. Bullet, affiliate acquisitions. The company plans, that's Railtown, to acquire select high-performing affiliates. The company plans to acquire select high-performing affiliates. And as a result of combining their product offerings, will provide a rich suite of vertical market AI-based applications and development tools in order to meet the needs of enterprise clients. Bullet point, platform integration. Railtown AI's Conductor platform could streamline AI development for the affiliates and their enterprise clients, increasing both adoption and productivity. Bullet point, expanded partnerships. With relationships already in place with major technology partners, including MILA, AMII, there's that name, AMII. One of the guys is the founder of AI Partners, AMII, Microsoft, NVIDIA, AMD, UBC, etc. The company will continue to leverage these partnerships to accelerate enterprise sales and product innovation. Bullet point, recurring enterprise revenue. The integration of AI-based vertical market applications, along with AI development and management tools and services across affiliate network, is anticipated to drive strong, not weak, strong, recurring, not one-off, recurring revenue growth, not flat revenue, revenue growth from long-term, not short-term, not one-off, long-term enterprise contracts. Long-term enterprise contracts, recurring revenue growth. Quote, this acquisition represents a transformative moment for both Railtown AI and AI Partnerships Corp. By combining our Conductor platform with AIP's extensive affiliate network and enterprise partnerships, we are creating a powerhouse that will drive significant revenue growth and deliver innovative AI solutions to businesses, multiple, worldwide. The opportunities ahead are immense. We are poised to expand our reach, scale, and accelerate innovation across industries. Together, we will shape the future of AI in ways that unlock long-term value for our shareholders, customers, and partners, said Corey Brandolini, founder of the knockoff tie collection at Cy Sims department store in Tyson's Corner. Now, said Corey Brandolini, CEO of Railtown AI Technologies. Quote, from its inception, another quote, AIP set out to assemble the largest network of AI solutions organizations. From its inception, AI Partners set out to assemble the largest network of AI solutions organizations, that's plural, who provide a diverse package of AI solutions that meet the needs of enterprises in industry sectors that realize significant returns on investment from the adoption of AI-based application solutions. We found, that's AI Partners, that's Omer's, that's Ruffalo, that's Dr. Core, that's all those guys I just read. We found Railtown's Conductor. They have 163 companies, and they're screening others. We found Railtown's Conductor had broad deployment relevance across the entirety of our network. With a combination of Railtown and AIP, we are excited to actualize our public market vision as we seek to commence with an aggressive targeted affiliate acquisition mandate upon what? Upon the conclusion of this exciting transaction. Does that give you to a clue of the second definition of now? The second definition of now is the conclusion of this exciting transaction, stated Dr. Tom Core, CEO of AI Partnerships. To facilitate the acquisition of this transaction, Canaccord Genuity Corp has been engaged as exclusive financial advisor and lead agent to the company in connection with the acquisition transaction and any concurrent financing. Both companies are working toward finalizing a letter of intent to formalize the acquisition in the coming weeks. I'd like to see that as a binding letter of intent, and I think it will be binding. In the coming weeks. That was February 11th. You know, just like that volcano, Campe Flegrere, that's been bubbling for 500 years, is now the time? Well, 500 years has a little bit more of a possibility than 50 years after its last eruption. I would say now that we're in the 13th week, we're really close to getting that finalized letter of intent. The acquisition is expected to position the company to capitalize on the rapidly expanding demand for AI solutions in key sectors. Remember, PricewaterhouseCoopers says this is going to be a 15.7 trillion industry, market segment, AI. The ability to provide enterprise clients with a fully integrated suite of AI tools and services ranging from SaaS applications to advanced developmental platforms gives the new organization a strong competitive advantage in both domestic and international markets. The leadership teams of Railtown AI and AIP are aligned in their vision to create long-term value through technology innovation and enterprise revenue growth. Think Constellation software, $6 to $5,000. $18 years, basically, 2006 end of to now. think that. The leadership teams of Railtown AI, I said that already. For more information, you can go to www.aipartnershipscorp.com. You can also go to www.railtownaitechnologies.com. AI Partnerships Corp was formed in 2020 with the goal of establishing a worldwide affiliate network of AI as a service based companies who are focused on providing AI-based solutions in a select number of sectors. These sectors include healthcare, manufacturing, supply chain, and fintech, as well as the broad AI development tools and applications that cover all sectors. We have established a network of over 160 software as a service-based AI affiliates, primarily headquartered in Canada and the United States, who have offices in 13 countries worldwide. The affiliate network consists primarily of companies who are non-competitive with each other and who work closely to cross-sell to each other's clients and to jointly pursue and boldly go where no man has gone before. By establishing and working with the affiliate network, AI Partners has been able to identify the best affiliate candidates to potentially be acquired by AI partnerships. Railtown AI, a Microsoft partner, has developed a cloud-based application general intelligence trademark platform called Conductor. Artificial intelligence and automation that perform tasks and streamline, enhance, and accelerate developer productivity engineering through speed, quality, automation, and best practices are the cornerstones and foundation of the Conductor platform. We purpose-built the Conductor platform to help software companies and software developers save time on redundant tasks, improve productivity, drive down costs, and accelerate developer velocity. Railtown's proprietary AI technology designed to enable our clients to be more productive and profitable is accessible on Microsoft's Azure marketplace. That, my friend, was announced on February 11th. It's now June 12th. Do you think you have more time before they finalize that LOI? You might. I don't think you do. I don't think you do. Now, let me just, I'll show it to you later. The multiple. I don't think you understand what you're looking at. This is huge, and it's all there right in front of you. It's all information in the public domain. Let's just quickly look at Nixie. I mean, I like Nixie, and I wanted Nixie as a trade to give me a chance to buy more Railtown, and it didn't. I gave it a shot. It didn't give me that chance. So Nixie just announced acquisition of Lead Nova platform, but they also had another announcement. yesterday. Yeah, Decide Act. It didn't come out on the Yahoo yet, but it says Decide Act signs an LOI with NASDAQ listed Nixie. Who cares about NASDAQ? Adina Friedman doesn't care about NASDAQ. She doesn't care about it. But anyway, I don't want to be negative on Nixie. I like the possibilities there, but all I'm saying, Steve, by the time you get your ass out of Nixie, Railtown's going to be $4. So Nixie would have to be, I don't know, $20 to make it the same transaction. Only you can determine what you should do. Decide Act, ACT, has signed a non-binding letter of intent with Nixie, with the intention of delivering a binding offer to Decide Act shareholders after due diligence and exchange approvals. Do you think they're going to need audit to get it approved, Steve? This is without saying this is good or bad news. Let's assume it's good news. It looks good. Do you think they're going to need an audit? Nix desires to acquire a minimum of 51% of ACT's common shares. An initial purchase price of the Denmark krona, I guess, $1.75 a share will be offered. Well, there's the deal that the shorts will try to bust up. They're gonna offer $1.75 per share, I assume, in shares. So the shorts are going to set about destroying Nixie's price. So to get the equivalent amount of this, they'll have to offer, I don't have time to do the math, but the arithmetic, but they'll have to offer double or triple the number of shares. That's the risk with this. So they'll probably walk away from this deal if they're trying to make it a successful company, or they'll go ahead. I'm not going to read any more of it. I don't want to waste time on it. You can look up the Nixie story and make your own decision, Steve. But I think you're being given an opportunity here to buy all of the Railtown you want at 37 cents. You can hang on to Nixie, and you can hope Nixie goes up. But they just had a good announcement. The stock went down. As you know, it doesn't mean anything. That's what the shorts do. But they don't have an auditor that I know of. And they're on NASDAQ, so they got to do 2 years of auditing, as far as I know. So you can wait and see if Nixie will go up, and then come buy Railtown. If it is, only you know this, if it is your goal to own more Railtown, and I can't give you advice on that, I don't know your portfolio. Now's the time to buy Railtown. And I can't believe it's still under 40 cents. I cannot believe it. And it looks like it'll be under 40 cents tomorrow too, but it might not be. I would try to do it today. I try to buy Railtown today. But I love your position in Railtown. I love it. That's great. That is just enormous, and I love it. But I think you can get to 400,000, 450 today. Maybe you can get to 500,000. I'm telling you something, Steve. I don't know how this opportunity is here, but you have a chance to, with one decision, and it might be a one decision stock. It might be that you buy it, and just like Ty Cobb with his Coca-Cola shares. He never sold any. He became a drunk and rabble rouser, got in trouble. But what bailed him out wasn't baseball. It was his Coca-Cola shares. It might be that these shares become your best friend for a long, long time. And I would submit to you that Railtown will be purchased by one of the companies in its partnership program. AMMI, AMD, I forget the others, NVIDIA, Microsoft, there's some others. So you might not even have to ever make a decision to sell Railtown. It'll be boring for you. You won't be able to, and same with me. I mean, I don't have anywhere near what you have. Nowhere near it. But if I want to make it'll be my IRA, if I want to make that significant, maybe it's just buy right, sit tight. Maybe the information as it comes will be so good, you won't want to sell. Now, the shorts are going to want to make you sell, and they're going to try to make me look ridiculous so you don't make money. They don't want you to make money. Anyway, thanks for two things. Ryan, if I'd known it was you, I might have called you a scholar instead of a gentleman. No, I did mean to get back to you. I'm sorry, Ryan, I'm sorry I left it to the end of the call. It's just, I get distracted. People say things, they try to trigger me, and then I get, anyway, I'm not good at this. But I appreciate it. I want to go through the rest of the research report, but I want to get through the answers, the questions too, because odds are they're all going to disappear. I'm from India. Very, very good. That's great. I love it. I love that you're from India. Highly appreciative of your prayers. Thank you. Oh my gosh. Oh my gosh. Oh my gosh. Many people in current governor, they died as well. Oh my gosh, account settings. I'd love to visit India. It's just great people, great country. I'm so sorry for that. It's frightening to believe. I haven't really taken many flights recently, but I used to fly all the time. And it's just so hard to believe that that airline went down. It's a good, safe aircraft, and it looks like the power. I hope it wasn't something to do with terrorism or something, but it looks like the power went out, and the pilots, I forget their names, but the pilots, one was like Cooper or something, but they all had, you guys in India have the longest last name sometime. They're all, I can't remember them, but I read them, and they're, they have 1,000 years, 1,000 hours more of flying time. So I don't think it was pilot error. And God, to me, that's always when I fly, it's the scariest point. You can feel it just as the plane, there's all the thunder down the runway, it lifts, and then there's that few seconds, is it going to get it or not? And it always ends up getting it, but here it didn't. And it's a frightening thing. There is one gentleman that survived, and that's going to be difficult for him, I think. But he deserves prayers too, because maybe there's a reason he survived. But thank you, account settings. I didn't know you're from India. I don't know what else to say. Am I worried about the MOU with Railtown now? No, I mean, I think it's a fair question because, like these other companies, they're always throwing announcements up and seeing what will stick. I'm not worried at all. I'm not worried at all about the MOU with Railtown. It has taken a long time. I'll give you my suspicions, Pete, why it's taken so long. This is a big merger. The Canada is a lot smaller than the United States market, the Canadian market. But the SEC, they actually do their job. Our SEC doesn't. Say to some extent they do the job. And one of the parameters is to make sure I don't know what they call it. I don't know if they call it the Sherman Antitrust Act. We still have the Sherman Antitrust Act, but no one cares about it anymore, unless it's a political weapon. Everything's financial in our country, but there's still that aspect of it. So how does it relate to your question? Pretty much, once that initial MOU is signed, in most cases, I looked it up on a website for Canada. It's mostly a 4-week process to get approval, and most of them take that long. If it's bigger and it involves some theoretical or not theoretical competition suppression, it takes longer. And I think that might be part of what happened here. I've asked around. I don't think it affects. This is all brand new. There's so many companies. I don't think it's affecting competition, but I think it's an issue. It probably got on that desk. So that adds some time. If I had to guess, Pete, the guys at Omer's and the John Ruffalos, and there's probably more than just he, and the Railtown guys, all smart. They've done this all before. I bet they're lining their ducks up in a row to make sure they can come out the gate. And I apologize to all the souls aboard that flight. It's a lot like an airplane taking off. They want to get on the runway and just turn on those engines and lift and lift and lift. And anytime there's a weakness or an air pocket, they have more lift. That's what I think's going on. So that might have taken a little while. It may be that they're pre-arranging, some levels of finance. I've never known a company not to need at least a modicum of capital. So that maybe that's some sort of negotiation going there. I would just say it's the complexity overall, Pete. It says it in the news. The whole idea is to roll up these 160 companies, or the best of the best. And I bet there's a lot of attorneys. There's a lot of negotiating. And if I can step back to Logic announced that they were going to bring in 7 or 8 companies, and it was going to be worth, in a conservative level, I calculated it at 40 to 60 cents a share. But the trick is, Pete, and I don't think Brent had that capability, or I don't know the situation, maybe he does. But the trick is, and I tried to explain it to them as they were doing it. I didn't get any ear. I tried, but I don't have any leverage there. But the trick is, if you have 6, 7, 8, 9 companies, like in the case of Logic, it was FM8 and this MetaMune or whatever, and then you've got 6 or 7 more. The trick is, I think, is you got to negotiate with all those companies, at least the core of them. It's like building a fire. You need enough of the embers in the center so it roars, and then you could add more sticks later on and it keeps roaring. But if you just start with one log, light it, and you try to attract another log to the party, it looks kind of, it's, when Brent went out, in my opinion, he should have struck a deal with all 8 companies simultaneously and agreed a price and told them all, this is what we're all doing and this is what the price is going to be. But instead, the criminals, you get one done, which I think was the criminals. I think MetaMune or whatever it is part of the criminal strategy. We'll find out. But if you only do one, what's the incentive for the others to come in? In other words, the one comes in, takes 85% of the company. They're not going to want to reduce to bring in the others. It becomes negotiation after negotiation. It becomes dilution and it becomes endless, and it becomes not the solution. It becomes a drag. So my guess is, Pete, and I'm just guessing, but out of the 163 companies that I have a record of it. If my understanding that they're doing 400 million in revenue, out of 163 is probably fewer than 30 companies, and probably significantly fewer than 30 companies are doing 80% of that 400 million. So I would guess, it's the 80-20 rule. 20% would be, 32, 36 companies. I bet it's even less than that are doing, you've been in sales, I'm sure. It's usually the high producers are just, a relatively small percentage of the sales force. And I think that's probably here as well. So my guess, Pete, to not make the mistake Brent did, and I'm not blaming Brent, he had a board and, I think these guys, the Ruffalos, the Omers, the retirement guys, the 2 founders at Railtown, they've been through this before. And I think they know to make this work, they've got to bring, I don't know, out of 163, they've probably got to bring somewhere between 20 and 30 Yule logs in, negotiate, put the straw underneath, negotiate some more, go back and forth, discuss it with Canaccord, discuss it with investors. That's why it's a quiet period, by the way, because they're negotiating. They have inside information that you and I don't have. That's why they can't buy. It's illegal. But they're adding the straw, adding some lighter fluid, adding some paper, adding some dry leaves, putting kindling under there, and they're going to have, I don't know, let's say 25 Yule logs out of the 163 Yule logs in the forest. They're going to put 25 there at the fire, and they're loading up, they're doing everything to come out of the gate with the wind. They're not making the mistake Logic did of doubling the amount of shares and doing a deal with one Yule log and trying to start a bonfire with one Yule log. They're going to come out of the gate with 25. I'm using the 80-20 rule, and 20% of 123 at 163. It's 33 companies. So let's say it's, but I don't, I've never noticed the 80-20 rule to be exactly right. When I was in production, I had my book. It didn't really work. It was smaller. It was smaller than 20%. So let me use 25. I don't know. Maybe I should use, all right, I'll use 32. Maybe they're negotiating with 32 companies. 32 Yule logs are getting stacked at the fire, and they're negotiating. They're putting the dry tinder, the maybe some starter fuel, maybe part of the lighting the fire will be a financing. Who knows? They're getting it all ready to go. So out of the gate, the bonfire, as it catches, is going to light up 32 Yule logs rather than one. Logic came out of the gate with one. How the hell are you going to get a roaring fire with one log? It's not thinking. So I think it's the experience of these guys and their resources. I think they know that if they want a chance to be first mover, kick ass, be the place to go, so that when Morgan Stanley, when Fidelity starts raising money, when State Street, when BlackRock starts raising money in the BlackRock AI ETF, and 200,000 wealth advisors all over the United States start calling up and saying, I think we should allocate 5% of our account into the new AI. Do you know? I was just watching a video and they've put a report out. And do you know that AI in this second generation could be $15 trillion worldwide? I mean, and I'm the first. I'm wealth advisor 187 telling you this, and no one else knew this. Well, you know it. You know it right now. You know it right now. But you might want the comfort of all those AEs and account executives, customers, men, wealth advisors, consultative, financial consultants, and now they're managing directors. They're all salesmen, and their goal is to get you to put money in ETFs and mutual funds that will then put it in AI companies. I think the founders here understand that they have to have 32 Yule logs on their fire, so that around the fire comes Larry Fink, Ken Griffin. Well, he doesn't run a fund. Well, yes, he does. He runs a fund. The Fidelity chick, the Morgan Stanley group, the Vanguard funds. They're going to all gather around this Yule fire because it's roaring. They're not coming out like a limp dick, like Logic. We've got one Yule log and it's a tiny one, and it should be okay. But by the way, I'm going to go work on Nixie. I mean, that's dead. That is abandonment. That is child cruelty. That is abandonment of shareholders, in my opinion. I don't know the decision making. I like Brent, and I think he's honest and hardworking, and I don't think he did anything wrong. Maybe he just got tired, and I'm sure he lost money in it. So anyway, I'm not worried about the MOU at all. Not one bit. Not one bit. Not one bit. Yeah, that doesn't mean you shouldn't worry, because it's, that's what the shorts, that's the little area of unknowable that the shorts drive a Mack truck through. And in the case of Nixie, by the way, I think Nixie is playing with fire, pre-announcing that deal. The shorts will try to change the price of the stock so the deal doesn't get done. It's kind of what they did with G-Bucks. But, you know, powerful whales and powerful sources of capital can change that. But the hardest darn thing is to get people to put money above the stock price, because to them, the stock price is telling the value of the company. It's not true in this market. There's no price discovery. So I think what Omer's guys at AIP and the Brandolini Haddad group getting their heads together and saying, we got to come out the gate with a roaring bonfire if we're going to be successful. And I think that's what they're doing. So I think the extra time is to make sure that not only does one log start roaring, 32 are roaring, and then in the garden, all of the big investors decide they walk away from puny Charlie Brown fires and they come over to the roaring, warm, glowing fire where all the women are and the music and you know, some of the best drinks and food are all around the big fire. That's what I think's going on. Hey, John. Hey, Donna. All right, Sam Guest. I got to write that down. Got to write that down. Congratulations. You're like me. We're not on the Steve end of ownership. I'm more on the, I don't know exactly where. Carmel Valley. Wow. 43 more from Julie Kim. I hope everybody here, that's my goal now. Even though I get a lot of abuse, I'm seeing abuse. I'm feeling kind of small. The audience is pissed off at me on strike. But I hope everybody that's buying Railtown, what I want more than anything is you get bloody financially independent. And I'm telling you, it may come. You got to use your money management skills. But I think this might be a stock that it goes to $4. What I'm saying, it shouldn't be 40 cents right now. I think it should. Look, broad stroke. I'm making a declarative statement that has some room in it, but I'm trying to make a point. It shouldn't be 40 cents right now. It should be $4. It should be $8 right now. Right now. It's not there because those guys can't buy. But soon it's going to be at least a perceived price it should be. And then all that upside comes from that level. So Julie, I think you might be sitting on this stock that you're buying and you're up 10x. And in every one of these other stocks, which are short squeeze plays, you probably should be taking the money off. That's not what this is. This is I don't know what to say. You probably don't remember a company called Netscape or a company called CQ, 2CQ, all these companies that got bought out. But this might be like buying Facebook slightly after it IPO'd at $38 or $32 and went down to 20 something. It's very much like that. Or it's like buying Bitcoin after it rallied and when it pulled back a bit, maybe at $500. This could be something that, despite all those negativos on Twitter, that want to tell you how smart you are because they want you in the banking system so they can FUCK you. This might be the stock that puts you, you know, it might be the stock when I'm I don't know, sitting on a coffee plantation in Peru and unreachable. This might be the one that you're on and you say, God, I kind of remember that guy. Yeah, I hope it were. I really, that's actually my only driving, because I didn't sleep last night. I walk around, everything's negative. All I hear back is negative, negative, negative. Nothing positive. A couple of people are very positive in my life and really appreciated in my life. But everything else is negative. And I'm like, why the hell do this? Why go live? You don't do it well. You don't present well. You don't know technology. You don't know, you don't believe in the short squeeze story anymore. So what the hell are you doing it for? Time to get on with your life. Well, what always brings me back is that people here, and I think it's just very few people that are even listening to me, but people lost money in GME. They lost money in AMC. They lost money in MMTLP. They lost money with the honest man at CRTD. They lost money with the sincere man it was his fight at Genius. They lost money with the smart genius at MMAT. They lost money at the revolutionary technology and strategy at MULN. They lost money at Logic, LGIQ. I still to this day cannot understand that. But Logic and Collective Audience, they lost money at, well, I don't know. There were chances to make money a lot of times, but I don't know. I would say people have lost money at Finger. They've made money at Finger. They've lost money at GDC, ZJYL, all these stocks that they're trying to create a hook to get the system to buy in those shares. Page 1. This is page 78. Let me give you a different page. Shorts, fails, and loans. If the problem were just naked short sales, then the dilution of share value and shareholder rights would be corrected when the shorts were covered and the market price moved toward the real value of the firm. But when settlement failures are added to the picture, then the shorts have no incentive to cover. Can I read that again? If the problem were just naked short sales, then the dilution of share value and shareholder rights would be corrected when the shorts were covered and the market price moved toward the real value of the firm. But when settlement failures are added to the picture, then the shorts have no incentive to cover. The trade is allowed to remain unsettled indefinitely. 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 You're in, definitely. There is no margin call because there is no loan. Can I read that again? There is no margin call because there is no loan. Finally, even where stock lending takes place, the problems are only compounded as explained above. All right. To be perfectly clear, the source of the problem is threefold: short sales, settlement failures, and stock lending. The short sellers do harm to a company's reputation and damage to the share price. That's all those people you listen to on Twitter that make fun of me. That's all those guys. And I know there's a lot of material here. I know, I get it. The short sellers do harm to the company's reputation and damage to the share price, both of which limit the firm's ability to access capital, both private capital and market-based capital. The investors bear the brunt of the damage, that's you, from settlement failures because investors are not getting delivery/ownership of the shares after making payments. You think you are because they put an entry in your account, but you're not getting it. You're not getting delivery. Institutional investors likely stand on both sides. Institutional investors, that's BlackRock, likely stand on both sides of the problem. As investors, they see the value of their portfolio shares eroded by the short sellers, and then they relinquish the voting rights in pursuit of higher returns by lending their stock out to the short sellers. The damage caused by all three issues stems from the core problem, which is a failure on the part of management at the DTCC to provide secure, guaranteed final settlement for trades. But the DTCC is owned by the banks. So you see that there? Let me just read what she says. Trades settled with borrowed shares. Trades, I'll underline it. Trades settled with borrowed shares leave open a failure to receive. Anyway, I don't want to get into that. I don't want to annoy you with all that definition. So what this says, is that's the DTC. So you have shorts up here, shorts, fails, loans. And it's a big circle jerk, and it just goes on endlessly. Then she asks over here, if the DTCC neglects to take action against participants who are in default of delivery of securities, and the SEC neglects to take action to discipline the DTCC, then where can investors turn for protection? Anyway, it's a valid fight, and I've been fighting it, but I sense that we don't have time. Look, we don't have any time in the silver markets. We don't have any time. I don't think I'm ever going to be able to build the position I want in silver before it breaks out. The stock market is going to go to all-time highs very soon, including NVIDIA, including SMH. We're going up another 25-30% in all the markets. Interest rates, ironically, are probably coming down. And we're just running out of time. It's a luxury to fight the shorts. They are so coordinated and they swarm together. But here I feel like I've stepped into something that gives you a chance to get away from all that short selling crap. There may, looking at the way this thing's trading the last few days, since last week, I'd almost think there's some algorithmic trading going on in Railtown, but it can't be a lot. It can't be a lot. It's not a short squeeze play. Railtown is not a short squeeze play, and that's why it's different in mentality. Anyway, Julie, I'm going to write this down. Bought more, 4,300 more. That's great. I hope it makes you well off. I hope everyone is. That's what I was trying to say. What gets me on now is just, as corny as it sounds, I'd like to see the people that do this make money. And that means I've got to tell you about it, and I've got to retell you about it, and I've got to, hold your hand a little bit. Once it starts going, you won't need me anymore. It'll be on TV probably. Do you watch TV? Is there such a thing anymore? It'll be on streams, and it'll be in the news. That's what I think's coming. No one has fewer customers than Mattress Firm, and they're everywhere. That could be. That makes a lot of sense. That could be laundering. That's true. That's true. Chestnut. So good to see the William before the MMTLP. Thank you. I want to get back to I don't know. I can't tell the difference, but I want to get back to before Nixon lied to us on TV. I remember when Coke was just cola. I love that dog. I know being is that a Doberman? I know they wouldn't automatically like me. So it would take a long time, but I used to have a Doberman that I loved so much. It wasn't mine. It was a girlfriend. And she would, she was very protective. She didn't, I don't know. It didn't seem like she liked anybody, but she liked me. She liked me. I loved her. She was a great dog. Beautiful dog, Dobermans. People from the age of 30 to 40 have good memories going into a GameStop store. Well, I don't have that memory. They're in denial that the company as a game store is dead. Absolutely. It's a financial engineering company. And make no mistake about it, Cohen is helping some funds get out of their trouble, and they're helping them make money. Every time a transaction is done, an overpaid wanker is making money, and a hedge fund is booking a profit, and a money manager is showing a profit they can charge their 2% on or their 20% on. It's all about just moving money around so the insiders make money, and they're telling themselves they're doing a good thing, but they're not, in my opinion. Hey Donna, I missed the Game Former magazine. I missed the former Playboy magazine. What hurts? What did I say wrong? Love hurts. Ooh, love hurts. Dun, dun, dun. Justin Babish. I'm comfortable at 37. My comfort level, Justin, I wish I could buy more. And you know, when you're listening, you've got to say, well, do I know this guy? Do I trust him? It doesn't mean I'm right, is my point. But I'm telling you, Justin, I mean, maybe something makes it go down on a day to 32 cents on a day or a half day. I don't know. I can't predict the future. But what I can predict, Justin, as sure as I'm sitting here, there'll come a day, whether it's next week, the end of the month, middle of July, August 1, there'll come a time when Railtown is trading for 10 times what you paid for it. And it's going to stay there. I mean, in general, there's always going to be fluctuation. Look, guys, these idiots that want to scare you, they use the most basic. I mean, it's impossible with the English language to always put a caveat on every single sentence. Everything here is opinion, and it's not financial advice. But if you were what's called, and many of you are accredited investors, it's just presumed that you understand everything or you know the risks. And I've spent the last many years only talking with accredited investors and CEO. Everybody understands what's going on. But there's nothing that's risk-free, as you're about to find out in bonds and CDs and anyway, leave it there. Could I screenshot my account, sell paper silver? I wouldn't sell silver now at all. Silver's about to break out. It makes me sick to my stomach. I've been wanting to buy a large position in silver for a long time, and money's not going to arrive. It's just how it goes. And there isn't another one coming along. Everyone says, "Oh, there'll be something else." No, there won't. Silver's going to be a transformational wealth for people that are in it. But if you're asking, should you sell your, I don't know, the SILV or the I don't know what you have. I don't think you have to. I don't think the financial system is collapsing yet. War is a risk, but I don't think it's collapsing yet. And if I'm right about, and I think I am, that the market is going to have this blow off top, it'll take everything with it up. And maybe that's the time to swap from your paper silver to physical silver. But the problem is, if you don't do physical silver soon. There won't be any. Silver, platinum even, gold, it's moving east and to Russia. While we sit on our hands. And guess what? Wall Street, I would submit this to you, that Wall Street is going to get you via their wealth advisors focused on AI as the next NVIDIA, the next Mag 7, the next thing that everybody invests in. And they might not quite do as impressive a job on gold and silver because they're trapped. They're trapped. I've got to look into it. A friend of mine was telling me that maybe JP Morgan is flat gold now. I don't know. I got to check on that. But there's a lot of paper manipulation out there. And as gold, silver, apparently China's ramping up their purchase. I read some of it too yesterday of platinum. What that implies to me, there may not be, they don't want to run up gold yet. They don't, well, they already have, but not further. They don't want to trigger a crisis, but there may not be enough. So we're running out of time in that area too. And it's much better to own physical than any of these products Wall Street makes. Wall Street makes products so they can charge you a fee. They can leverage it. They can hypothecate, rehypothecate, and rehypothecate. Pete and rehypothecate were on a bridge. Pete jumped off, who was left? Which platform can you buy RLAIF? Well, I use Morgan Stanley, E-Trade. And I'm pretty sure you can, I know you can buy it there. If you're international, you might have to use something like Interactive Brokers. But if you're international, you don't need to buy RLAIF. If you're international, you can probably buy the parent company, which is RAIL, and I believe it's .cn or it's .to. It's Canadian. Okay, there we go. Right, I think we're back. Let me check the microphone. Something happened. Yeah, it's all good. Okay, there we go. Yeah, Justin, that's the thing, because, and I'll give you an example. If I own Nixie or Finger and they ran, my goal was to put all that money in silver, frankly, at least as a starting point. now this Railtown, look, what changed Railtown for me, Justin, and I'll go through uh, I'll go through the rest of that research report before I sign off. But what changed it for me is that they're buying AI partners. But you know, when they first announced they were joining AI Partners Network, it's like, well, that's not much of an announcement. You know, I joined the Delta Airlines Sky High Fly Club newsletter. They joined a network. So what? But then when they bought it, it started really changing the story for me, you know. And I've seen in my lifetime a couple of times. There was a woman I was in love with for a while. She was great. She ended up getting married and leaving Merrill Lynch. And her husband, a very smart guy. Of course, I was young and I didn't, but he's a very well-meaning guy, very well-meaning guy. And one time he got on the phone and he told me about I can't remember the context of it, but it was basically Microsoft. And he talked to me, I took notes, talked to me for an hour and a half about why my investors should start buying Microsoft. And he told me about the computing this and the software that, and it used to be that the big computing power at a company was sitting on site. Now it's going to be in the computer. I don't know. It all got way over my head quickly. And so at that time, Microsoft, I don't remember because it was so long ago, but I would say Microsoft was $14 or $17, something like that. It wasn't much. I could have built a position across my entire book and never stopped talking about Microsoft for the next 5 years, and I'd be rich now. I'd have probably $1 or $2 billion under management, and I'd be set. But I didn't do it. I didn't do it. And I watched over time, and I never forgot his kindness, but I also never forgot that, wow, that guy called the move. And, obviously Apple and others, but it was the same sort of strategy. Another friend of mine told me about MasterCard. I ignored that. I was wrong. I think she also told me about Amazon. And I was like, but I was no longer whatever, a wealth advisor. So there wasn't much I could do. But I saw both of those run. And then I was skeptical about Tesla once it went to like $400 or $600. But these things gain momentum. I never saw NVIDIA until it was too late. I never saw the sunshine till I stayed up all night. I never saw your tears until they ran down your face. Anyway, I never saw it. And then the other thing is, I've told you about Bitcoin, and I had all the opportunity. I studied it. I kicked myself, but it's one of those things. I didn't do it. But it was under $1. You know, I could have put 25 grand in it without changing my life at all. I could put 100 grand. And AI's been around a while, but this is, as James Altucher says, this is AI too. And I think the big difference, Justin, I think the reason this AI is about to transform and rapidly accelerate. I'm not talking about Railtown. I'm talking about the whole momentum. I don't have the vocabulary, but it's what NVIDIA has built. It's what I guess AMD or that one in Taiwan. It's these new, whatever they're called, chips or processors. They're so fast. They can absorb it's quantum, I guess, but they can process so much data. And I think that's finally what's allowing AI to just accelerate. And so I think we're on the verge of a Bitcoin type decade of AI or longer. We're on a verge of a Microsoft and all the computing type thing. The change is funny. The computing used to be in a big block, the IBM model, at the company, and then the computing went into the PC, which became the Mac, and now the computing's in the cloud. It all cycles, but AI, the cloud storage helps it too. So I think Railtown. I'm sure Railtown isn't the only company in the AI space out there, but it's the only one I know about, and it's got brain power behind it. It's not Silicon Valley, is it? It's Canada. And there's people that don't trust Canada, but Silicon Valley, you've got to know you got to know there's a handful of people you got to know. And by the time you get invited to a Silicon Valley investment, it's already gone up the value creation curve. This one, I don't think has even begun. I'm telling you, Wall Street's about the cycle of investing. It's friends and family, then it's angel rounds, and then it's maybe a little more friends and family, angel rounds, your girlfriend's father or something. But then it used to be you could go to the over-the-counter markets. You could go to an investment bank. That's all gone now. That is just, and I think it's on purpose, because now for that idea to go anywhere, you've got to go to the Red Sox boys at Silicon Valley or in Chicago or in New York. You've got to go in there, and they'll come in, they'll do a little mezzanine. Maybe you have to find the equity that's right there, but they'll come in and if it's really great, they'll do it all across their books and their friends. They'll buy in personally, and then they'll go up the ladder, and they'll bring in a fund out of Chicago. One I remember, Madison Dearborn. They'll bring in one of their buddies like that, and it'll start climbing that ladder, and there'll be warrants and payouts and juice going on. And then it'll go up higher, it'll get into the mutual funds and ETFs, and that's done at a higher level. And there's investment banking fees all the way and juice all the way. And then finally, it'll IPO and it'll come to you. But if it's the first IPO, it might go to your hedge funds first, your money managers first, and then it'll jump. Like, do you have any Snapple? It might come out like Snapple and run up. And then it's the secondary that size is available to you as retail. And guess where that's dumped? That's dumped into your retirement plans, your 401ks, your mutual funds. And that's all, that whole cycle that they can suck on the tit of all the way up is done with the big banks. It's all manipulated, and there's no way in. There's no way in, because you need all parts. You need a good product, but more importantly, you need the early funding, but then you need the new funding to establish the new value, and then you need the performance and the funding that keeps that going. And then the next step, that establishes the new value, so it pulls everything up. Everybody can pay everybody out, but the success story keeps getting bigger and bigger, because Amazon made a lot of mistakes, but then they brought in that, or they merged in that company, that automation, a new change, a new idea, or Facebook, Microsoft went out and bought a messaging service, and that, it becomes a group of people all working together to get the value up. But as you add new investors up the value creation curve, and it can go on for a decade, it can go on for 2 years, whatever the cycle is. They bring in things to keep it there. Well, you're not in that. I'm not in it. I'm in it if I get into oil and gas or mining, because the bankers aren't there yet. They're not. They'll come, and then you can't do it anymore. That's the cycle I've seen over and over again. But right now, it's still available. By the time I have any access to capital to make things happen, I think it might be gone, because waiting is, what's a waiting game? Anyway, life is a waiting game. So anyway, Justin, I really think right here with Railtown, we're in early. Obviously, we're not in at the friends and family. Obviously, we're not in at Angel Round. And obviously, we're not in before Canaccord comes in. But Canaccord isn't Morgan Stanley. Canaccord isn't Goldman Sachs. So we're still in earlier enough. And we're getting into Railtown using the US dollar prices. Remember, there's an adjustment for the loonie versus the greenback. But just using US dollar prices, a year ago, it was 62 cents. So it came out of the gate with a bang. But it pulled back. Everything pulls back. That's fine. But it stayed pulled back now. And it's not performance. It's not, as this other gentleman asked, it's not the MOU. Well, not per se. It's that their business plan, which was R&D, then go commercial, jump up that value curve, that value creation curve quickly, and I would imagine sell. That's what always happens. Well, not always, but look, I've been around long enough. Microsoft goes out and buys message companies. Google goes out and buys YouTube. That's what happens. So that's the model that got me thinking first on Railtown. And I thought it would be very quick. I also thought it would be just a quick trade as it jumped up that value creation curve. And it didn't happen. And you know why? Because they joined this AI Partners network, which I poo-pooed, as is my want. But then they bought it. So we've had this prolonged quiet period, and I'm not pounding the table I was telling you about it and telling you we should be buying it and looking at it. I've been saying that since October or even maybe September. But they announced that merger February 11th. Now's the time I'm pounding, because we're getting just the same price right now that we had back then. But we don't have 4 months to wait. I understand the question. Oh, what's going on? I hate that. There we go. 38 cents on Railtown. The volume is 389,000, better than yesterday. Today our best, tomorrow better. Benjamin Bradley. It trades, I tell you, it trades like they turn on computers, which I see as an opportunity to buy. I really mean that. So Justin or others, Julie, Kim, go in and buy, and the stock doesn't move up because it looks like there's computers in here. And that gives us a chance to accumulate. I don't think we're going to have much longer chance. So I applaud everyone. And I think I agree with you. I think it'll be cheap at $1. Dirty Randy, Nix has zero chance to run like Railroad. Lots of scumbags in Nix. And auditor left. Well, I don't, Dirty Randy, I don't want to. I know some of those people, but yeah, I think your assessment, without all of its brutal name calling, is probably right. I think Nixie, without the look, to me, squeezes come as a surprise, and I just don't know. Nixie was recruiter.com, and they counterfeited shares there to a fairly well. So look, I gave Nixie its chance, and I'm not ready to say that revenue isn't massive. But if I had to choose between Nixie and Railtown right now, there is no way in hell I'd buy Nixie. I would put it all in Railtown right now. Now, in 2 weeks, if Railtown's $4, I might have a different answer. I doubt it, but I might. But at 40 cents, Railtown is just a screaming buy. And if I bought Nixie, let's say I paid $2.50 and now it's $1.80 and I'm losing money, I'd just say to myself, that's the cost of trying. That's the friction that I give up for trying to do a trade. But as a client of mine, who's a friend of mine, told me years ago, jerk. No, he wasn't a jerk. I visited him. He's not a jerk, but it made me mad that he was so smart. He would show me his screens and I'd call him with my ideas. But he taught me time. You can't, once your idea doesn't work, time, just get out, because time works against you. It works against the trade. And he was right. And he's been correct for on that. I've really learned that lesson. Anyway, right now we're 37.20 to 38.4, 5 by 50. There's no 50,000 for sale. I'm telling you, you have, if there's some computer organized day trading, short selling going on here, and they might be doing it just because it's me. They want to come make fun of me. It's giving you an opportunity to buy the stock. You have Nixie $1.75. I'd get out. I can't give you personal advice, but if it were me, I'd take it and I'd buy Railtown, Steve. And I'd try to do it in the next 8 minutes. I can't guarantee, well, I can't guarantee anything, but I can't guarantee you tomorrow that Railtown doesn't open up 20 cents. I'm telling you that. Just because it didn't happen today didn't mean it Couldn't have. And if it doesn't happen tomorrow, it's not because it couldn't have. I'm telling you, there's going to come one morning when this is 60 cents. And then you're going to be saying, oh, I could have, should I? Just, if, Steve, my advice, only you can do it. But if it's in your gut to do it, if you want to do it, if you want to have a chance of owning 450,000 shares of a stock that's going to go to $10, now's your time. Now's your time. Now, that's a projection, not a promise. Do I have to say it every single bloody time? I buy Railtown on E-Trade. I have to pay commission. Yeah, I do too, Justin. I pay, I think, $4.95. I think that's what I pay. That's fine. Justin is trying to. I bet Railtown has a self-learning AI that can study volcanoes. Well, I will tell you, you bring up a good point about Railtown. It's self-learning AI. So conceptually, when technology comes along, like I mentioned it before, there was this big messaging, I think it was 2CQ, and I think Microsoft bought it for $400 million. But it disappeared. But it was all the rage, right? I don't know, Yahoo, other than Yahoo Finance, was all the rage. Anyway, you can think of examples over and over. So in the sort of the high-tech, what we called high-tech space, now technology, now AI, the idea is as soon as something comes along, you better sell it or adapt before it becomes worthless or gets passed by. Well, I wonder with AI technology that is self-learning and closed, and it's acquiring the customers. In the case of Railtown, as this analyst says, they have a chance of acquiring a significant amount of the customers. Well, then you're using customer data, customer problems, customer issues, and you're self-learning. I don't know. It may be impossible for competitors in that certain kind of AI to ever catch up. Now, maybe there's a way to come up with some technology like the liquid terminator. Was that? It almost looks like mercury. Maybe there's something, I don't know. Ryan Sartell, I hope you're diversified. Well, I disagree. Ryan is suggesting to you, Steve, that you should have 1% in Railtown. I don't know. He might be right. I don't know but it sounds like Ryan's a wealthy man. If you're not wealthy, and he's right, if ideally you diversify, but diversification is if you're already wealthy. If you want to make it, I doubt when George Soros made the $1 billion, that it probably wasn't his only trade, but I bet it was a big bet when he made it on the betting against the pound. Sometimes you got to go all in. Only you can decide that. I can't give financial advice. But for me, with my now puny account, I'm all in on Railtown, my IRA, because that's the only way I can see that over the next 2 years, I can get in a position that Ryan Sartell is already in, where I don't think you should ever own things as 1% of, well, let me say it differently. If he's counting bonds and CDs and cash and all that, that's different. But I don't think you can ever have 100 companies in your portfolio. It's just impossible to keep up. I would imagine it, you know, at the most you can, I don't know. It's everybody's different. Everybody's different. But I don't agree, Steve, with Ryan. I'm in fact, I'm just the opposite. I don't know you, Steve, but if your choice is to own Nixie or Railtown and you already have Railtown and it's going to be diversified to own Nixie, I don't see it that way. Diversification is more than just having a different named company in your account. Diversification is a different product altogether, a different class of asset altogether. Nixie and Railtown, I don't even think Nixie and Railtown are in the same class. I think Railtown outclasses Nixie, Finger, ZJYL, GDC, MLSS, you know, go down the whole list. Railtown, I'm telling you, Railtown is mispriced. And it's in the wrong basket. It's in the bargain bin at the dollar store. It should be over on the premium rack at, I don't know, Lord and Taylor. You don't know that, or Saks Fifth Avenue, or at Macy's. It should be on, I mean, that doesn't work. It should be the premium at Ralph Lauren or somewhere. And that's coming. And I won't have to explain it to you anymore. You'll be able to go online and you'll see news stories on Railtown. You'll see research. It'll be part of portfolios. It'll be in the ETF. You won't need me talking about it anymore. But that's not happening to MLSS, G-Bucks, GDC, ZJYL. And, you know, I'm not picking on any companies, but it's just, that's a whole different category. Railtown isn't those kind of stocks. So, Steve, I think Ryan's 100% wrong. But you got to make up your own mind. And I appreciate Ryan giving you advice too. William, will you hold my hand and tell me exactly what to buy and sell? I don't like holding anybody's hands. I don't know where I get that from. There was one girl recently when we were, I thought that was great, but otherwise, yeah, I'd rather hold a dog's paw. I'd rather hold a moonbeam in my hand. Wow, Steve, you got 50 more. Good. Steve, I love it. Steve, you're going to be the richest guy here. Then you can diversify. Then you can diversify. So you're up to 3. Oh, that's fantastic. Steve, I hope when you're gonna, this has a chance, Steve. We're not there yet, so let's not get ahead of our horses. But let's say, I don't know if you're buying more, but let's say you keep 350,000 shares for the rest of your life, or not, nothing you'll keep for the rest of your life. But let's say until you're my age, it could. This is a stock that might cause you to stop trading, at least with the bulk of your assets. On the margin, you can do some trading. I'm telling you, it's that kind of stock. We'll find out if that's true. And the good thing is, if the company is sold, let's say to I don't know, to AMD, well, then AMD's like any other stock. You can make your own decisions then. So it might be a one decision stock. I'm so glad you're building your position, and I'm with you on it. I wish I could do it. I'm telling you, if I had the money out of this or that, I'd be right with you, but I'm not. I've got much less, but I'm thankful for what I have. I'm not being unthankful. Oh, did I make you mad, Brandon? Yester, you went in depth on my comment. I hope G-Bucks goes up by more. Why didn't you remember? What you didn't remember is I already have 34.5. Yeah, if that's enough for you, that's fine. I would look, Brandon, I'm not telling you what to do, and you might not have much more time to do it anyway. But I get Ryan's point. I'll say it in my own account right now. I only have one position. It'd be great if I had three, because I'd sell the other two to add to Railtown. So, I mean, he has a point. It's good to have more than one. Maybe G-Bucks goes up tomorrow. But I'm looking at what you're giving me there, Brandon, 34.5. And I'm looking, I don't know, you've got some G-Bucks. Oh, there it is. I don't know how much that G-Bucks is worth right now. But I'm looking at that, Brandon, for me, and I'm saying, man, I wonder if I can get that to 50,000 shares of Railtown. And then if I got it to 50,000 shares, I would say to myself, I want to hold 50,000 shares for Railtown to go to, I'm making it up, to go to $50. So maybe I'll try to get it to 55,000 shares of Railtown. So if Railtown goes to $10, I can sell 5,000 shares at 10, take 50 grand off the table, and I've still got my long-term core position of 50,000 shares of Railtown. That's how I'd be thinking. That's just me. So if you're more comfortable with 34,500, which is an excellent position, it will make you very happy, in my opinion. And you can hang on to G-Bucks and just watch G-Bucks drift for a while here and maybe get back to 4 and then come back down to 2 and you know, at least you'll be able to be in with everybody else on that. And maybe G-Bucks does, and maybe they get the deal done in August, and then it runs, and G-Bucks does something great. But G-Bucks right now, to go up 10x, has to go to 18, which is possible, I suppose. But Railtown, if you had 55,000 of Railtown and it goes up 10x, you've got 5,000 you could sell it. If you have 50,000 Railtown and it goes up 10x in the next, I'm going to just pick a number, in the next 2 weeks, by the end of June, it goes to $4, and you have 55,000 of Railtown, you could sell 5,000 of it at $4. That's 20 grand, and you could come back and reestablish your position in G-Bucks, roughly, maybe more, maybe less, and you could still participate in what your dream is of G-Bucks. But the risk is for 2 weeks you're out of G-Bucks. Now, it could be 3 weeks, could be 4 weeks, could be 6 weeks. But I'm telling you, my sense of the urgency to be in Railtown is within 2 weeks. I've already been wrong about it this week, I'll tell you that. But it went from 22 cents to 30 cents, and now it's closed at 38.55. So I haven't been 100% wrong, but I haven't seen that jump yet. So, which I think is a great buying opportunity. The reason for Railtown to be here is not for you to dilly-daddle It's for you to act, because Railtown's going to be $4. And if you can't perceive that, that means you believe G-Bucks is going to be $18. And so you have to sit down and think, all right, do I really think G-Bucks is going to 18? And it could squeeze. It could bloody go to $180. And if you believe that, then of course you hang on to it. But there's a middle way too. Do I think G-Bucks is going to go to 18 by the end of, I don't know, by the end of July? I don't know. I really don't know. I don't know why they didn't get the deal they announced done before the dividend. But they might. You might. But by the end of July, could Railtown be $5? That's 12 times my money, 12 and a half times my money. So I'm being paid to take the risk of being out of G-Bucks. And if G-Bucks is flat to slightly up, I can then spin off some Railtown and go back into G-Bucks if I love it. That's how I'd be looking at it. I'd try to get to 6. What would 8250? 225. 225. It's better than 180 times 8250. 18,000 divided by 39. Wow. Brandon. You do what you want. I think you're crazy. You could have 80,000 shares, 82,000 shares of Railtown. I think you're crazy. I don't know why you're waiting. If that goes to 5, you have $400,000. Is that a lot of money to you? $410,000 if it goes to 5. Right now, if Railtown goes to 5, you have 172. Still a lot of money. But what sounds better to you? 172.5 or 410,000? I know what sounds better to me. I don't know, Brandon, why you're even waiting. But I can't. All I can do is continue to put pressure on to see it. Then you have to make your own decision. But I don't think you're seeing it. G-Bucks is shit. That could squeeze. We got money over here, 212,000, that's going to come in and buy 30% of the company, and they're going to put shares, and it sounds great. I agree. I bought some. But it's all manipulation. It's some app. They're going to bring in money. It's incredible. It's the kind of stock you want to buy after you have $400,000 in your account. You'll buy $10,000 worth. But let me just give you another scenario. We'll use the 10% of the marketplace that Railtown can target as is. So that's 300 million. And we'll use 300 million from the 400 million of Railtown, of Partnerships AI, which probably can, all of this can grow much bigger. So that's 600 million in revenue. which blows anything Nixie, G-Bucks, Finger. I'm sorry, it just blows them all out of the water. It's just how the facts are, Jack. And there's no short squeeze involved. So 600 million in revenue, and we'll multiply that by 25 instead of 12. You got 15 billion in valuation. 15 billion in enterprise valuation. We will divide it by 175 million shares to allow for some stock sales. That can't be right. That just can't be right. 15 billion divided by 175 million shares. $85.71. Let's call it $85. Now, Brandon, this 300 million is the projected revenue that Railtown could make of a $3 billion marketplace. The marketplace is actually 140 billion. But as the analyst is being conservative. But at 10%, you get 300 million. This is the kind of number they can start projecting by the end of the year. 300 million. 300 million is 100 million less than AI partnerships are doing now. So that's $600 million sometime this year in the projection or in reality. Multiplied by 25 times, you get 15 billion enterprise value. You divide it by 175 million shares instead of 139, you get $85. My point to you, Brandon, $85 is not way in the future. It could be end of this year. It could be 1 year. It could be 18 months. But this AI space, there's so many people's brains already attuned to it, they're going to bring all the good news forward to now. That's $85. I don't know. How much do you want me to discount that for me being full of bullshit? What do you want me to discount it? I don't want to discount it at all. Discount it 90%? All right, we'll take it down 90%. $8.50. $8.50 should be now. Now, to me, is whenever the stock crosses the stock price that allows retirement accounts, family offices, and et cetera to buy. I don't know in Canada. Is it $1, $2, $3, $4, $5? I think it'll definitely happen by $5. Now is when they announce the finalization of the merger that's taking a long time. So you want to sit on your hands and think that G-Bucks competes with Railtown. It doesn't. No, it could squeeze. If G-Bucks squeezes, it doesn't change the validity of my argument. It just means G-Bucks squeezed, and that was a shot in the dark, and wow, that I could have been in it. But if you wait for that to squeeze, I don't think you're coming back here, but I could be wrong. Only you know what you think G-Bucks is going to do. But I think 850 is a highly plausible number for Railtown in the very near term. I'll say Railtown could be 850 by July 4th, July 15th. What do you think G-Bucks can do? Go to 8? So you have 8,250 shares of G-Bucks, and you think it can go to 8 in the next 2 or 3 weeks. That's $66,000. That's pretty good. Damn good, actually. And if you turned around and bought Railtown at 60 cents, that'd be awesome. But I don't think Railtown's going to be there. That's the problem. I don't think Railtown's going to be at that price. So if you now bought Railtown at 39 cents, you could buy 47,500. So your G-Bucks over the next 3 weeks or 4 weeks could go to $66,000 if everything works to the positive, which we know there's no guarantee of. But if Railtown, let me use this $8.50 number, which is, you might think that's too much, but let me just use it. That has the potential on its own of being worth $400,000. If you buy 47,596 shares and you add it to your 34.5, you have 82,000 shares, and if it goes to 850, you have $697,800. You have $700,000. And you want to hang on to G-Bucks. The difference, I guess, in my thinking is this is an almost, it's a highly projectable result for Railtown. And the whole world's going to be coming in, lifting up the boats of AI. But you would rather be in G-Bucks, where they have to convince a guy with 212 million to buy 30% of the company, which implies a valuation of G-Bucks of 700 million, which it's not worth right now. And that guy has had about 6-7 weeks to get it done. He hasn't gotten it done. Maybe 8 weeks. He hasn't gotten it done. That either means his commitment is growing, or it's changed. He might be losing his interest. I don't know. Okay, let's assume they get that done. They could get that done. The shorts in it, I think, are possibly trapped, but the shorts got trapped at the end of last year. Yeah, but I believe it. I believe the shorts are probably still trapped. I do believe that in G-Bucks. It's apparently a Goldman Sachs type. It's, as I heard it, it's out of Goldman Sachs. So that could be exciting. That's true. Apparently it has a huge short position versus a small float, and all the whales own more than the float. That makes it exciting. They put out a dividend so that there's a warrant. You get one warrant for every 10 shares. They put that out, but they didn't get the deal done by that time. They have a product that is a charity contribution app, but it's more than that. It's a way of giving bucks through an app, and no one's ever come up with that idea before. But it uses AI, and they have something going on in the Middle East, and they are avoiding the Jeff Eastons of the world. So you got that going for you. So there's a lot of things, Brandon, with G-Bucks that do set it up to test the idea of having a short squeeze. It's all there. But it hasn't happened yet, which I guess means it's going to happen tomorrow or Monday or Tuesday. And that's possible. Only you can decide that. But I don't think there's any manipulation. There's no pieces which have to fall in place with Railtown. There's no, you got to get the inside shareholders to give the shares to this guy, and he's got to buy 30% of the company. And then we need the contract signed during the worst time to get anything signed in the Middle East, the dead of the summer. Nothing happens in the summer. Nothing. Trust me, nothing happens in the summer. Unless you're dealing with the very top decision making. Nothing happens in the summer. So you gotta say to yourself, is G-Bucks really gonna happen in the next, pick a number, 3 weeks? I'm willing to bet you a dollar bill that Railtown will be at $5 by, let's pick a date. I'll do 4 weeks, July 11th. I'm willing to bet you that Railtown, I'll bet $1. Railtown will be at $5 by July 11th. And I'll bet that G-Bucks is not at $5. It's $2.50, $4, $4.50. But anyway, you know what you're doing. You know what you're doing. I did my best to give you my thoughts. I'm just hoping my dividend comes through. You're going to miss it. You're going to miss it. But anyway, if you can live with missing it, that's fine. Only I don't know you. You know yourself. You know your situation. If you can live with missing it, that's fine. It's fine. I sold my G-Bucks on the day it went ex-dividend. So maybe I'll get my dividend. Maybe I don't. I don't care. I do care. I'll, you know, the principle of it. But I wanted my Railtown. All right, let's, but anyway, Brandon, I gave you my strongest thoughts. Ultimately, it's your decision. I can't give you financial advice. So do what you, do what you think is best. VR is virtual reality. Oh, okay. Sparky says to you, Steve, run it up, buy. But buy all you can. I agree with Sparky. I don't know who Sparky is, by the way. But he's either 73 years old, or he graduated in 1973, or he was born in 1973, or he owns 73 mules. Is it safe to talk GTI yet? Asking for a friend? Yeah, sure. I love what I think it was Julie was doing, selling GTII and buying Railtown. That's what I would be doing right now. I would be taking advantage of the idiocy out there, the completely out of whack valuation of GTII, and I would be buying Railtown. It's given to you right now. It's given to you right now. But you don't do it because you get on a space call and you start thinking with the crowd. If you want to make money, you can stay with the people that ridicule me. Stay with Tony Broke, and you'll stay broke. That's how they want you. There's devils out there, and we're each capable of being good and bad, but there's people out there that don't want you to make money. I don't know if you're really Asian, or if someone is Jewish, or if someone is a woman, or if someone is I don't know what. Pick a thing, from Kashmir or from Liverpool or Polish or Irish or brown or white, or I don't know who I'm talking to. I want all of you to make money. I want you to be independent. But to do it, you've got to break out of some of this thought, and you have to act. There are times when the stock market gives you a price that's wrong both ways. Let's see what I'll do it briefly. I'm not going to do it for a long time. But let's see what that means. I got to ruin my account screen and put this shitty stock up. I can't even trade my GTII. All right, so GTII closed at 20 cents, and you want to ask for a friend. The last trade was 1,000 shares at 20. Some idiot is buying 1,000 shares at 20. I'm not making fun of them as an idiot. It's an idiot move. The market cap of GTII is 66.5 million at 20 cents. All right, 66.5 million. Let's see what the market cap of Railtown is. God, I can't believe people are just dumb. But I guess everybody's dumb until they know better. 51. Okay, Mr. Tang. Railtown's market cap is 52 million. GTII's is 67 million right now. Let's pick a time frame, because you want to talk about it. You want to waste everybody's time. Number one, you cannot sell GTII as a matter of right. I think it's Julie here has gotten some trades off, and I commend her. Bravo, 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 bravo. I don't want to waste a lot of time on this, but how much revenue is GTII going to do this year? You don't know. How much revenue are they going to do next year? You don't know. Are they going to get the deal done? You don't know. What are the terms of the money raise that GTII is going to have to do? You don't know. What is the burn rate of GTII? You don't know. What is this product that's going to be sold? It's a trading platform. It's going to bring $30 in a month to the people that sign up. It's revolutionary. What is that revolutionary? Well, it's I guess it's AI, but you don't know. Is it something that Morgan Stanley's going to buy or Merrill Lynch is going to buy? Maybe. I don't know. That stuff you might know. And that might be great. That might be great. But let's just say it's bloody great. How much of GTII is that technology going to take? Right now, you, Mr. Wu, and all your friend and all the investors own 100% of GTII. When the technology comes in, what are they going to take? What do you think? 50%? You're crazy. They're not going to take 50%. I think you're lucky if they take 85%. If it's me, they need you guys as shareholders, because most shells don't have a lot of shareholders. They need the stupidity of this group to put up money. The ignorance is a better word. Ignorance of this group to put up money. Because then they'll take that money and they'll go to the bankers who will put up derivatives, and they will risk your money and nothing else. They'll manipulate the system to give additional money. Then the people that are in this company that's been developed for a long time can start making salaries, taking money out, paying for living in Dorado Beach. I'm sure it's all good. As far as I can tell, the guy's an honorable guy. Totally. But I would say to be better than a deal he could get on a shell that's on the New York Stock Exchange, he might have to pay money. Or on the NASDAQ, he might have to pay money. Or a different over-the-counter shell. I would bet that you're going to have to give him 90% of the company. So that means ceteris paribus, that the market cap available for GTII current shareholders the market cap available for current shareholders in GTII at a 90-10 split, and ignoring that the receiver gets 20% of that, will be $6.5 million at current prices, all things remaining the same. The current market cap is 67 million. Well, they'll bring in the technology for 90%. So your friend will have shares in the remaining market cap of $6.5 million. So just telling your friend, you tell him that he's going to have his small percentage of $6.5 million. That's before they raise money, by the way. That's before they raise money. I think Railtown will be $500 million by that time. So I think Julie's doing the best, getting out of GTII, getting here where she can get 10 times her money. Look, after the money comes in, my guess is that the market cap that your friend will be involved in and by that time, I wouldn't be surprised so by the time they raise money, I think the cram down probably be worse than this, but I think your friend will be participating in a market cap of 3 million. I think it'll be worse than that. But if your friend, Julie, I hope, does this, I think Railtown, by the time this gets financed, Railtown could be $1 billion company. So you can tell your friend that I spoke about GTII, but it's a worthless piece of shit, is what GTII is. If they take it over as a shell and then they come to you with a new proposal, they're going to seek money. At that time, tell your friend, I'll be glad to analyze that proposal. But by that time, Railtown will be $10. So tell your friend, I think the best use of her time or his time is to focus on an investment that already wiped out. I think that's a much better use of your friend's time, to focus on a worthless piece of crap than to take advantage of something that is staring them in the face that could make it all back for them. I think it's much better. I'm glad I spent 10 minutes on it. It's the best 10 minutes of this call. Thank you, Mr. Tang Wu. There's no AI without access to data. All right, it looks like nobody's made a comment for 2 hours, 3 hours, so I'm probably talking to nobody. Can somebody give me a comment? Otherwise, I'm going to sign off. All right, I'm going to sign off. Thanks for being here.